So, good afternoon, everyone. This is Rajendran here joining from Market Calls. And welcome everyone to a webinar on how and where to measure market confidence. We already talked about market confidence. Now, on day-to-day basis, it's going to help you to overcome most of your mistakes, and probably it will be put you in a right path like a GPS. Market confidence is like GPS. No matter what, even if you're going to go wrong, the market confidence will put you in the right path, no matter what kind of market situations we are in, right? So it's a learning to measure the market confidence is a day-to-day practice, and every day we'll be measuring the market confidence at least 5 times or 6 times in a day, and which helps you to focus on the right place and when to shift your focus. That's what market confidence is going to teach. And once you are able to gain knowledge on market confidence, you'll be able to go and trade any kind of market confidence fearlessly. It gives you one layer of belief on your framework, right? So this market confidence which we are going to discuss here is very much elaborative, and that supersedes the open drive, open test drive kind of setups. So, and this can be applied practically. Whatever we discuss here, I'm going to give a cheat sheet over here. This cheat sheet can be applied to your practical trading strategy right from the day one onwards, right? And that's going to cut off most of the noise in the markets, and probably you'll be able to convert those noise into a meaningful information. That's what you can able to learn from the market confidence. And there are basically 5 confidence types we are talking about over here. One is high buyer confidence, which usually indicates strong buyers. Low buyer confidence, which usually indicates weak buyers. And high seller confidence, which means strong sellers. Low seller confidence, which is weak sellers. And low confidence or no confidence. In that case, that means neither buyers are not confident at that point. Means nobody is in control in the markets. Probably it is a better time to wait for your trading opportunity. Maybe this is not the right time to take a trading opportunity. No matter how much you feel, how much your hunch is saying that, when you're facing a low confidence markets, neither buyers are not serious, neither sellers are not serious. Maybe you have to wait for the confidence to evolve, right? So here is an example for a low confidence situation. Maybe you're able to get my voice. Is my audio and video quality is clear? Just give me a quick confirmation so that we can move ahead.
Yes.
Okay, great. Thank you. So here is a example here. One of the day, you see that the one of the day, this is 29th October. On 29th October, price end up like a trending day. It's kind of a trending day. Throughout the day, you are seeing one-time framing. And in the day, you're getting single prints here and you're getting single prints over here. That's fine. But look about the market activity, right? So the market activity was price opens over here. The day open was over here around mid of the day. Not mid of the day, but at C period. At the C period, it took the day high and got back in. But you see that more activity was happening here. More activity was happening in this band. So that is a sign that the buyers who showed up, they're not serious buyers. By around 10 o'clock, by 11 o'clock or 12 o'clock, you have a fair picture that where the point of control is most likely to be. And you know that it cannot be built higher. If it has to build higher, market has to break and it has to do more activity. So you know that is not an kind of a serious buying. A serious buying will be like they break and then they do activity and then they go for other side, or probably even if they have done some little activity here, they break and do some activity again, they have to go break. So instead of that, what was happening here is that the day high has been broken and price got back in. Price started making activity in this band. Price started a lot of activity in this band. When price is doing many activity in this band, point of control is still below the previous day, high. That is a sign of a low confidence buyers. When there is a low confidence buyer, always you have to look for a mean reversion trading opportunity. Getting my point? So where in this case price opens inside the range, price took the previous day high. Look into the point of control. Point of control, if you look around 10 o'clock, it's still below the previous day low. around 11 o'clock, it's still below the previous day low. 12 o'clock, still below the previous day low. That is a kind of a serious, that is not a serious buying. Even though the buyers showed up at the day high, they are not serious buyers at all, right? So I will say it's a low confidence buyers because they broken the day high. If they broken the day high, buyers are responsible for breaking the day high, but they are not serious buyers. So we should say like it's a low confidence buyers. This is one example to show how to measure the confidence. And now where to watch the confidence, which confidence level? There are multiple confidence levels we could watch. We'll be mostly watching the confidence level at key reference levels, right? So one of the reference level we'll be watching here is the short-term reference levels. The short-term, what are the short-term reference level? A P-shaped balance is a short-term reference level. A B-shaped balance is a short-term reference level. Double distribution, triple distribution, and spike base, all the reference level we are going to plot there are short-term reference levels where confidence needs to be monitored, and priority, first priority is always goes to the short-term reference levels. Means let's say there is a double distribution here. One of the day I'm having a double distribution. One of the day I'm having a double distribution. And one more day I'm having an previous day low is there. One more day, previous day low is there. Previous day low is there. And double distribution also coming nearby. So in that case, I'll not be monitoring the previous day's low break. I'll be monitoring the double distribution as my reference level. So we'll be giving more priority to double distribution short-term references compared to intraday references. There are two kinds of references. One is intraday reference, another one is short-term reference. We always give more priority to short-term reference levels, right? For example, when it comes to Nifty, right? When if you look at the recent activity, price broken price broken the 3rd Jan low. This is 3rd Jan low, but at the same level, where also there is one more short-term reference line is there. One more short-term reference line is there. See that there's one more short-term reference line. Here is the reference level. This is nothing but kind of a double distribution balance. We call this a double distribution balance. That double distribution balance is my major reference level on that day. I will not see this as a previous day reference level. I'll be mostly focusing on the double distribution reference level. So as long as price point of control is trading above double distribution reference level, I term that as a low I term that as a low confidence selling. The sellers are not serious sellers. Every time they try to push the price down, they're pushing the price down, they're pushing the price down. Again, they're pushing the price down. Now the price is again getting back into this range. So price never closed below the, till today, that 10,712 is acting like a kind of a support band. So if any weakness has to come, price has to break down below 1,720, then only we can think about resuming our shorting operations. Otherwise, I don't even consider shorting at all. Maybe some other locations in market might show me short, but as of now, at this moment, if I want to go short, I need a breakdown below 10,720 levels. I need a point of control to build below 10,720 levels so that I can comfortably believe in going short. I can believe in my own trading strategy in going short, so that I'll term that as a good selling confidence. If it's any good selling confidence, point of control should start point of control, let's say Monday. Let's say market, despite that some weakness came in, all of a sudden market opens here and market started doing sell-off instead of opening a gap up, right? This is a hypothetical example, by the way. And now more activity is happening, price is doing some more activity, and that is turning into a high confidence. That is one of the places to initiate a short. At times it could be a positional short also, I don't know, but it could be a best place to initiate an intraday short whenever you are spotting an high confidence open and that confidence is continuing. It's good to go in the direction of the breakout.
So I have one question here.
Yes.
So how long the double distribution reference line can be considered?
I'll still consider this reference level. So if in this example, see, I'm carry forwarding this reference, right? I'm carry forwarding this reference for right from 26 onwards. I'm carry forwarding. I'm carry forwarding and carry forwarding.
But how long?
Yeah, I'm coming to that. Just give me a second.
Sure.
So I will carry forward as long as price is point of control is building above that reference level. Let's say one of the day it breaks and activity started building lower and activity ends lower. Right, that day I'll cut down this reference. Until then, it will be active. So you see that still I'm this particular day I'm still carry forwarding this reference. I'm carry forwarding this reference, the double distribution reference, because point of control. This is a downtrending day, right? So it remember clearly it's a downtrending day. I kept a reference already, right? So if I'm getting an acceptance above that level, if I'm getting an acceptance above that level and the trading activity is happening above that level, then I'll remove this reference. But instead on that day, what happened? Price went up, but instead of acceptance, price got rejected. When I say rejection, I talk in terms of point of control. Point of control forms lower and it shifts lower. And so far, it is price is still trading lower. So again, this will be our primary zone to monitor. One of the primary zone to watch for confidence. Let's say where is the Nifty is about to open? Maybe let's say Nifty, SGX Nifty is about currently around 10,880 levels, right? Currently around 10,880 levels. Maybe what we are going to do here is that we are going to take a 2-day breakout. Price is going to break 2-day high. When price is going to do a 2-day break, that 2-day break will be my confidence level. Right? But instead, I will take confidence from the short-term reference level. Short-term reference level always takes precedence. So my reference level will be at 10,550 levels. This is the level I'm going to monitor on Monday. Let's say Monday market, let the market open anywhere. If it is going to open here, it would have done a 1-day breakout. If it's going to open here, it would have done a 2-day breakout. Here is a 2-day high. It would have done a 2-day breakout. So when it is doing a 2-day breakout, I'll be using this as my reference, this double distribution balance as a reference. If Monday more activity happens above this reference, then I will cut down this reference level. Otherwise, let's say Monday market opens, it started coming in, more activity, I'll consider going for a short. I'll consider going for a short based upon what market is doing, right? If the market opens here and comes down, does a lot of activity, let's say letter B, C, and D, it started coming in, then I'll consider short. I'll consider watching the point of control. I'll be monitoring point of control, and my expectation will be towards the downside if it is opening with a 2-day breakout. Whereas, let's say if it is a high confidence market, what happens? Market opens up. My monitor will be this reference level 10,857. If it is a high confidence market, maybe one or times it might plunges back, but point of control will be building here throughout the day, and it will be keep on shifting higher and higher and higher. So when the high confidence happens, first we will monitor whether to take a trade or not. If it started sustaining above that, it comes down below 1 or 2 times, it's fine. We don't keep that as a stop loss or so. But if started sustaining above that, you see A, B, C, so you go with the flow. Don't try to fight with the markets. Just go with the flow on the upper side. But you might see rejection mostly coming at the opening itself. Opening market opens, all in a sudden market opens, a very bullish US market. Despite that, if the market has to come down, they will come down initially, and then they will be do ABC balancing, or you'll be finding B, C, D, all these letters you'll be finding trading below your confidence level which you are monitoring, right? So in that case, market doesn't mean reversion. Market doesn't do mean reversion all in a sudden. That is quite rare. Market opens, it reverses back, but still it will be doing B, C, D balance over here. B, C, and D balance, and it does this. So this is what it happens most of the time if there is something has to change in the confidence, right? Okay, so by doing so, you'll be able to prepare for the scenarios. I don't need to prepare for you for the scenarios. By looking into the confidence level itself, you can adjust what the market is doing. Based upon what the market is doing, you'll be able to adjust your trading strategies. So for that, we need to give confidence. We need to give priority to the short-term reference levels. All the short-term reference level will monitor confidence. Even if the market opens gap up, let's say market opens with a gap up is not all, to me, all the gap ups are not high confidence markets. Let's say market opens with a gap up. Let's say this is a market opens with a gap up. Market opens with a gap up here. That's a high opening is a high confidence because it's a gap up. But then next second minute market comes down. I will not rate that as high confidence. I'll be waiting to market to call a high confidence or a low confidence. I'll start observing some more time. Some more time, if market does this, I'll say like it's a low confidence market. I'll tell you one very, very good example which gives you tremendous odds to do a mean reversion opportunity. That happens on election date. On the election date, it happens in Bank Nifty. On the election date, Bank Nifty opens with a big gap down. Okay, almost it is. The gap down was relatively around, not much, but just give me a second. Yeah, here is the gap down, right? It's the gap down was relatively how many points? Almost 500 points gap down. Market opens with a gap down, right? But gap down means high confidence, right? But think about here, relative to what? Gap down in terms of what measure? That's what we're going to think about here. So gap down, maybe I don't have the past data over here. What I want to show, yeah, here. So this is some 14 days low. When the gap down happened, market broken 14-day low. Okay, market broken 14-day low. I think some more low is there. Yeah, market in fact it broken 14-day low. This is a 14-day low here, 25,800. 25,400. This is a 14-day low. That's a swing low. Probably if you measure some past swing low, 14-day low. Market opens gap down. Market opens gap down, and it started doing activity here, right? And more activity, and more activity, and more activity, and more activity. So these are the signs that they are the price broken 14-day low, and it is whipsawed around multiple times, and it started coming back above. It is a sign that it's going to be a mean reversion trading day. You're going to take a mean reversion bets. So most of your big opportunity comes like this. It all of a sudden it breaks multi-day low or a multi-day high, and then market mean reverts back. It's the same, exactly same thing happened on Gujarat election results as well. So maybe I don't have profile charts, but I can narrate from the daily charts. You go to the daily charts, Gujarat election day. So where is the Gujarat election day? Okay, maybe I have to add some more data points. Yeah. See, on a Gujarat election day, what happened is that this is the low. That is 1, 2, 3, 4, 5, 6, 7. 7-day low has been broken. 7-day low has been broken. When 7-day low is broken, I'll be monitoring my key reference level at 7-day low, right? So if I'm watching for a good sell-off, what I'll be doing is that I'll be waiting for the price to come down, more activity. Again, since it's an event, it has to plunge down and more activity, plunge down and more activity and plunge down. That is my understanding for a high confidence selling. But if it is a low confidence selling, when one of the multi-day high low has been broken out, but all of a sudden it comes back in. So all these things happens in a second. This first 1 minute itself it broken, it came back in, it never traded below that. That after the first minute itself, that's a conclusion that it is a low confidence selling. Sellers are not serious. What you have to monitor is that price should not go down below that's 7-day low, right? So throughout the day, if you watch it on throughout the day, the price completely traded above 7-day low, and they completely done a mean reversion there. That is how most of the mean reversion trades happens. All in a sudden, market opens gap down, which also happened sometime back, which recently in Nifty, exactly where in Bank Nifty it used to happen. Let me pull up Bank Nifty charts. One of the day, it was a Bank Nifty expiry day. It opened with a 600 points gap down, and then completely they mean reverted back everything. Probably it was somewhere around September or so. Most likely, I think it could be this day. No, not this one. Yeah, this day. If you look into this day, right, one of the day price closes casually. It closed on the upper side. The very next day, price opens gap down of 600 points. That was a complete gap down. Whatever the price gained, entire thing has been lost. And you see that it broken previous day low. It broken previous day low, but initially they came back in because of global tensions, and market started doing a lot of activity, and then they came back. So that's how they cheat. So you can easily spot out the cheating if you start recording the point of control. They know that whether this whatever the 1 day breakout or 2 day breakout they are doing is mostly kind of a cheating patterns.
So who drives this big gap down on gap ups?
It mostly because of emotional. See, some of them are emotional gap ups or gap downs. Mostly because of global markets. Somebody will panic and they are the first one to exit out of the markets. That's why the market opens gap down. Like even.
But these days it's happening very frequently, right?
Yeah, these days in a high volatile markets, you can always expect gap ups, gap downs are quite normal. And in a low volatile days, gap ups and gap downs are not frequent. Are not highly frequent. So right now, what you're seeing is in highly volatile days. That is a sign that we are most likely to make a bear transition. But the question is when. So as a short-term trader, you don't need to bother about when. So, but you know that this is somewhere we are very close to the bear market transition. But do I need to bother about it? You don't need to bother about it. Just keep focus on the framework.
Okay, and one
high
more
volatile phase, gap ups, gap downs are very common.
Okay, and one more question is like in the gap downs, as we are considering the multi-day support.
Multi-day support. What do you mean by multi-day support?
So multi-day low.
Multi-day low, yeah.
Yeah. So is that so you said it's low confidence on the seller side. So can we take otherwise? Other side, like
yes, you should be. If there is a low confidence buying or low confidence selling, we need to take the other side. We need to take a contra trades.
Okay.
If it's a high confidence market, you should never ever trade against the direction. You should be going in line with the direction. Mostly, you have to do trend following.
Okay.
Right. So that's where the cheat sheet comes. So we talked about which is short-term reference, which is intraday reference. Intraday reference are like rally high, pullback lows, previous day high, previous day low, previous week high, previous week low, multi-day high, multi-day low are the intraday reference levels where we monitor confidence. There are other levels like prominent point of control and halfback. There we don't monitor confidence. So I'm just trying to check whether we can include prominent point as a reference or not. But as of now, these are the references which are currently in the framework, right? So intraday reference, all the references which are mentioned here are in hierarchy. So if there is a rally high or a pullback low, then let's say one of the day I'm having a rally high, right? So this will be my reference. So how I will say that this is a high confidence is price opens, acceptance came in, ABC formed, or letter D formed, letter E formed, all the point of controls are forming higher. That is a sign that it's a high confidence market. So you need to align in the market direction. So you have to go with the market direction. If it is a rejection, what happens is, it will be happening something like this. If it is a rejection, price might open down and they might try to take up. Sellers will respond. Again, they will try to take up, sellers will respond. Point of control will form over here and price will take down the previous day low. So in that case, if you start seeing point of control forming over here, you have to think about mean reversion gains, right? Because it's a rejection. Whenever you're seeing a rejection, it's most likely the buyers are not serious. Even though price is trading inside the range, This is your previous day high, this is your previous day low. Price is trading inside the range. My first priority always goes to the rally high. I will not look for the previous day high or previous day low as a reference. So always the first priority, the top priority goes to short-term reference. Right, among the top priority, these are the references which are there, which is almost having equal references, equal hierarchy. But when it comes to intraday, always the rally high and pullback low has the top priority. That is why you will be able to spot your trading opportunity faster. That is why you will be able to monitor whether they are going to sustain above rally high or sustaining below the rally high. You can get a very early confirmation that you won't be late to the market. What my understanding is that at least I want to be in the innovator side or on the early adapter side. I don't want to be in the early majority, or I don't want to be in the late majority or in the laggard section. So to avoid that, always, even the price is opening inside the range, if there is a rally high or a pullback low, let's assume that I have an previous day high and previous day low, right? So what at times price opens inside the range. Opens inside the range. It's a low confidence. That's what most of the people says. But what I am saying here is that if it is having if there are no double distribution, there are no triple distribution, previous day is not an P-shape profile, there are no short-term reference level nearby, then you have to take into this level. You have to check whether there is a rally high or a pullback low. If there are no rally high, there are no pullback low, then only the case we will be considering previous day high and previous day low as the monitoring level. So tomorrow when the market is about to open, at what level I should measure? That is the first question that has to come to your mind. So let's take the example here. When the market is about to open, let's say if the market is going to open here, okay, I don't have any rally high or pullback low. It is a balanced market, so there are no rally highs, there are no pullback lows. And so if I am going to watch, and let's say the market is about to bullish, it's trying to break the day high, then I will monitor this as a reference. Let's say price opens here and they are trying to take the day high, then day high will be the reference. My initial reference will be the day high. If it is high confidence, point of control has to form higher. If it is a low confidence, price snaps back into it. Again, they snap back into the markets, right? Or let's say price opens here. Maybe 2-day high is very near, or 2-day high is near, and double distribution reference is also near. So I always prefer using short-term reference compared to the 2-day high. So I'll be monitoring that as my reference. So I'll be monitoring for acceptance or rejection over here. If there's any rejection coming in, I am the first one to short the markets, right? Whereas if it is high confidence market, what happens is that price opens, they go up above the double distribution reference level. Double distribution reference level is what we give high preference compared to the 2-day high. And activity if builds, again it breaks, it sustains, and it will do some other different profile, right? So again, coming back, one of the cases, there's a small change in this slide. Always multi-day high and multi-day low has higher priority compared to the previous day high. So first need to check whether it is a rally high, or whether there is any rally high or pullback low. If there are no rally high, no pullback low, then you need to check whether the day is about to break a multi-day high, whether it is going to break a 2-day high or a 3-day high, or is it going to break a 2-day low or a 3-day low. Then priority has to go below that. If none of them is there, then only we'll consider using previous day high or a previous day low as the market confidence. Then this holds both equal importance. Previous day high and previous week low holds the equal importance. And now the cheat sheet goes like this. what is the intraday target? Where you should target whenever if you are an intraday player, right? So what are the target points you have to monitor? If whenever you are seeing an low buying confidence or a low selling confidence, generally we tend to mean revert. Low buying confidence and low selling confidence are nothing but rejection points. Either you will be getting a rejection at the day high or a day low, or you'll be getting a rejection at the double distribution levels, or you might be getting a rejection at the P-shape balance. You might get a rejection at the V-shape levels. So whenever you're targeting a rejection trades, your target point will be always around today's point of control, or previously some uncleared priming point of control is there. That will be your prime target levels. If there is any intraday weak high or weak low is there, that will be your target zones. If there is any single print zones for the developing profile is there, these I'm going to explain during live market only. If there are any single print zones are going to form, we will fade those single print zones. And if there is any halfback is there, right? So then price comes and touches the halfback and you're getting a rejection, then halfback is again your reference level to, it's one of your target levels.
Rajendra?
Yeah.
What is the halfback?
Halfback is previous day high plus low divided by 2. So there are two kinds of halfback we will include into it. There are strategies we have on yesterday's halfback. Mostly what I shown yesterday is nothing but the yesterday's halfback is previous day high plus previous day low divided by 2. There are also strategies which you can do on intraday halfback. So intraday halfback is like today's halfback. What generally does is that when today's activity is building in, right? So let's say this is today's activity, and today's we have a center point. Price comes to exactly to the center point and bounces back. So that is this is today's high plus low divided by 2. When it's bouncing back, price often comes and remains reverts back. Intraday halfback, when someone is initiating there, mostly intraday players are trying to take dominance over there. Right. So very soon, what you can find is that intraday halfback you'll be able to get some. Currently, you can find intraday halfback also. Yesterday's halfback also. By default, it is not on here. But if you want to enable it, what you have to do is that right click, go to indicators, and you have to enable the halfback. So it's called a enable mid session line, which is nothing but the halfback. Apply it. You'll be seeing an yellow color line at the middle of the session. Yeah, so the such kind of yellow color lines. Let's say this is today's activity, and activity is happening, and if price is all these the references, the intraday halfback is a dynamic reference, means it keeps on shifting up and down, up and down. Let's say around around 11 o'clock it was here, and the price comes down exactly to the halfback, and it is bouncing back. That is a sign of you can expect some quick trade. You can do some fast trades over there. That level is not an that's levels are mostly dominated by the intraday players. You can anticipate one more correction towards those levels.
So how much priority will you give with respect to halfback and POC?
POC, what do you mean by, I mean, what kind of priority?
Like in terms of the target, like you said, right?
Yeah.
Market will go up and will come exactly to the halfback.
So let's say I'll give one more hypothetical example here. Okay. Let's say when to trade towards the point of control. If you ask me when to target towards the point of control, if ABCD formation is there, already ABC, letter A, B, or even say C and D and E already formed. Okay, A, B, C, D, E already formed. And price break the previous day high. If price breaks the previous day high, and assume that price haven't tested intraday halfback, price haven't tested the price, there are no mechanical players at halfback, There are no mechanical players at intraday halfback, but I am seeing this ABCDE reference. Right? ABCDE reference, what the point of control establishes over there. Right? So all in a sudden, there was some sudden spike coming in the markets. Right? What does that means is that the point of control has now, most of the point of control has been established over here. And now price willing to mean revert back. That is a sign that the sellers, the buyers are not serious. So most likely the very first target is towards the point of control. Very first target is towards the point of control. Maybe you might be able to get some 30, 40 points at times. If the volatility is very big, it can be 50 to 60 points by that time. So not every time market is going to give you a bigger opportunity, right? But you know that most of the times ABCDE is going to come. At times it could be only 20-point opportunity because the market ranges are very small. So you tend to ignore those kinds of opportunities. That means you not necessarily have to trade every opportunity. But yes, there are times you'll be getting a bigger opportunity. There are times you will be getting only smaller opportunity. It's up to a trader's wish whether they have to take it or not. So in this case, I'll be giving more priority to the today's point of control. But if I say like if there is one more prominent point of control is there, then what I'll do is that I'll cut off at 50% over here. I'll consider cutting down 50% of the care here, and rest I will trail it to the next prominent point of control. That is why I said like point of control, today's point of control I will take only if I am seeing ABCD or ABCDE pattern. If I am seeing that, then if I am seeing a low confidence buying here, this is a low confidence buying I'm talking about. If I am seeing a low confidence buying, then my primary target is towards where the ABCDE level got traded, where that POC level is my primary target. If I am seeing any other weaker level, right? Let's say that I'm seeing one more prominent point of control, then I'll be targeting towards the second prominent point of control. Revisit a test towards the prominent point of control. In that case, I'll give point of control as a primary priority. Let's say this is my halfback. This is my halfback. Went up. It went up. Right? It broke on previous day high. It broke on previous day high, but price coming back again. Okay, I'm sorry. Let's say this is halfback. Price broken up. And it rests on this halfback, and price broken the previous day high. Price broken the previous day high, and if it's a good confidence, they should build point of control higher. But instead, it comes back in. It does more activity. Point of control is relatively started shifting down below the previous day low. Then in that case, you can go and target towards the halfback.
Where to enable this PPOC?
PPOC is available only in the ultimate edition. So maybe if you are using basic version, you have to draw a line on your.
No, I have this Finalgo one, a market profile. We don't have in
Finalgo, they don't have an automated reference line. Only Bell TPO has market automated reference line.
How to do this manually, if that is the case?
If you want to do it manually, maybe I can show you. I'll open the basic charts. Okay. Say I'll duplicate the new tab. And I'm going to remove this. So indicators. Yeah, let's say I'm going to remove this indicator. And I'm going to plot this Bell Delta. So Bell Market Profile Pro, which is the basic version, like your Finalgo version. And let's say the TPO size I'm going to use is 20. Apply. Okay, maybe. So once you get this basic version, what you can do is that you have to go and check where you have to count all the point of control. Maybe here one of the prominent point of control is there. Let's say I'll take one of the couple of point of controls. So let's say this is a point of control. So you'll be drawing a line. You can draw a line by taking from here, say tools and horizontal line, put a line over here and say that there is a text. You can always use the shortcuts. Anyways, I'm not going to use any shortcut here. Otherwise, you may not be able to visualize what I'm doing.
So I have to search and do it manually.
Text, yeah, and put your cursor over here and say like prominent POC. And these you have to maintain on day-to-day basis.
Okay, fine, thank you.
Yeah.
Rajendran, in Ultimate,
Yes.
Bell TPO Ultimate, whether even the rally high and V6 also will be appearing?
No, rally as of now we haven't coded rally highs or pullback lows. We try to do a maximum. Now what we are trying to come up with a new feature is that I asked for let's say letter A period. We asked for letter A period halfback, letter B period halfback. So there are some couple of strategies we have at each and every halfback interval. As of now, we cannot practice it unless we have that automated reference available. It's something like we have a halfback at letter A and halfback at letter B and halfback at letter C and halfback at letter D and halfback at, so all these halfback you'll be having and halfback for each and every individual candle on the split profile you'll be able to get it. So based on that, we have some strategies on that. So maybe the next release, they are coming up with halfback at intra-bar candle.
Are these new releases are applicable for the lifetime subscription, like?
Yes, unless it is a major feature. Unless it is a major feature, all these small features will be rolled out to all the customers. That's what they are doing so far. If there is any major release, maybe I don't know. You have to check with Bell TPO guys. So I'm not the right one to comment on that.
Okay. Oh, sure.
Rajendra,
Yes.
what is the difference between POC and prominent POC?
POC not necessarily has to revisit. Prominent point of control often acts like a magnet. Right? So prominent point of control says that it is dominated by the shorter time frame. Whereas if it is just a POC, we don't say like shorter time frame players are controlling there. Prominent point of control is always controlled by short-term players and it is always prone to revisit. It's a short-term, prominent point of control is a short-term reference. Whereas these prominent point of control, I don't consider that as a reference at all. This prominent point of control, I don't even consider that as a reference. Right? Okay. So now let's.
Can you show it once again?
Prominent point of control is a reference. Always prominent point of control is a reference because it is meant to be revisited. Its price generally go and revisit those prominent point of control. So we draw as a reference line and that is a short-term reference. Whereas normal point of control, you see that where the prominent point of control is less than 4 activity or a 5 activity or a 6 activity or a 7 activity, we don't draw any reference line at all. So we don't consider that as a reference line at all. That's only the prominent point of control for that day. Only you can use it to measure the market confidence for that particular day. Nothing else. Okay. Yeah. And yeah, there will be only in the split profile you'll be able to get. There is question whether you need to have an halfback on each and every price level. It doesn't make any sense. Only in split profile we'll be monitoring the halfback levels, intra-bar halfback. Let's say one of the intra-bar halfback, let's say the A period halfback, price comes and touches in exactly the halfback and the price is going down, then that is again an
Rajendra,
yeah.
How to pick the points for the point of control? What is the draw? How to draw?
How to draw prominent point of control?
Yeah.
You don't need to draw it. The software itself automatically plots for you. That is where the maximum TPO is happening. It takes that particular direction, or the point of control will be drawn based upon where maximum TPO is allocated. Let's say if the TPO is more here and the TPO is less here, so you can see all these blocks, right? The point of control is almost same, but maybe your question is how the point of control is decided, right?
Yes, yes.
So based upon where the maximum trading activity is happened, if the more trading activity is happened over here, then the point of control takes the upper side. If more trading activity is happening on the downside, point of control will be coming over here. So it will be decided, automatically decided by the software. We don't need to worry about it.
So is it automatically indicated?
Yeah, it will be automatically indicated. You don't need to draw anything over there. So the point of control is just drawn in the form of black dots. Whereas if you are using an ultimate edition, in ultimate edition you'll be it will be automatically drawn as a reference line after end of the day. It will not be drawn during live market hours. It will be drawn once the day is over, and around after 3:30 you'll be seeing that common point of control appearing on your charts because it's a day it's a reference for the next day.
Rajendra, the package we bought, which includes the Bell TPO,
Yeah.
does it contain the Bell Pro or Bell Ultima?
Whatever you're getting is the basic version, Bell Market Profile Pro. That is the basic version.
Ultima we have to pay extra again, huh?
Yeah, anytime you can upgrade from Bell Market Profile Pro to Ultimate Pro. You can check with the Bell TPO team. Or initially you can practice with the manually hand-drawn lines. But over a period of time, you may not have day-to-day basis. You don't want to draw all those reference lines. Or sometimes you might miss a prominent point of control. If you feel that if you started missing all those prominent point of control, whatever it's coming on the ultimate edition are mostly useful references. Like at times you might miss that. Oh my God, I missed the failed auction. If I would have seen that auction, I would have been changed my opinion. I would have been strategized in a better way. If there are I would have been at times you might be missed this multiple prominent point of control in a row. That could be your signature trades. So if you feel that I can draw manually, I can manage manually, you can manage with the basic version itself. Or if you feel like that will give me, I don't need to focus on my all these drawing, all these lines. Most of these lines are critical lines for my studies. In that case, you can always migrate to Ultimate.
Okay. What is recommended? Like to learn, so I'm asking.
One second.
Rajendra,
Yeah.
how to enable to point of control in Ninja Trader? Can you show the
How to enable?
Yeah.
No, by default, if you are using in Ninja Trader, it doesn't have. If you are using market profile tools, you will get a point of control. Point of control it's not a default option in Ninja Trader. On top of Ninja Trader, you need to have some market profile tool. Then only you will be able to get point of control levels.
Rajendra, it's not showing in Bell Market Profile Pro. How to enable? That's why I'm asking. How to enable that the point of control, like any indicators are showing.
By default, it will be applied. If you apply automatically, you'll be able to see it. If you're not able to see it, then you just connect with their support team and you get assistance from them. Maybe your point of control levels, you have to right click and go to indicators and you have to check any of the control is disabled or not. But by default, all the controls are enabled. If you are not getting those point of control levels, just go and check with them. They might be assisting you on this. Right? So, okay, let's get back to
one more question. So,
yeah.
what is recommended to learn drawing the lines and resistance support oneself, then proceed to Ultima, or how do you see it?
So it depends upon whether you have time or not. If you have time, I would recommend you to go back, draw all the reference line manually and maintain those reference level manually. Over a period of time, we thought like we have to draw reference lines and we have to maintain reference line. Tomorrow, some of the reference line I have to remove it, and some of the reference line I have to add it. Still, we are doing everything. Not everything we are completely automated. All the reference line, whatever it's coming over here, are not completely automated. Some of the reference lines still I used to draw manually, like the Like the double distribution levels, if I want to draw double distribution levels, I'm still drawing manually. And if there's any spike base coming in, I used to draw manually. But most of the critical lines are automated over here. If you feel that those levels are going to change my trading strategies to look into the better way, which are very critical, I cannot afford to lose those reference line, then only it's good to go for a profile ultimate. But if you are very cautious in your trading studies, you don't miss any of the reference lines, then you can always go and plot your reference lines automatically. That you can practice with the profile basic version also.
Okay, thank you.
Yeah. Okay, now coming back. These are some of the key principles what we are following. Never ever trade against the high confidence market. When you are seeing the high confidence market, if you want to trade against, at least you wait for the high confidence to change into low confidence. Then only you can go and trade against the market. As long as you are spotting a high confidence market, better either go with them or you don't trade. If your psychology is not allowing you to trade, better stay away. Don't try to fight with a high confidence market. Fighting against the high confidence markets, fighting against the one-time framing, fighting against the double distribution reference levels are often end up in huge losses. And avoid trading in a low confidence market. When I say low confidence market, that is whether neither the buyers are not confident, neither the sellers are not confident. It's a good time to stay away from the market. Wait for something to change in the market. Wait for maybe the later part of the day, market might go and break the day high, and then it shows high confidence, or it will show high confidence in the form of one-time framing, or it shows high confidence in the form of some form of double distribution. Until then, until market is not showing something, better stay away from when the market itself not exhibiting any confidence from the buying side or from the selling side. Avoid trading against the direction of strong momentum. When I say momentum buying or momentum selling is happening, whenever I'm saying momentum buying or momentum selling is happening, I'll say most likely, maybe I should use an, first let's try to understand what is momentum. Most of the momentum days are like market starts and it bottoms out in the first 30 minutes. So it either bottom out or either top out in the first minute itself. And the activity will be mostly keep on moving in this fashion. So you know that if you're watching by 1 o'clock, or if you're watching by 12 o'clock, that first 30-minute low would have been not broken. That itself a sign of a momentum, strong momentum buyers are in control. And there are days, what happens in Bank Nifty, 8 days in a row, you would have been seen all the days, the first 30 minutes would have been, market would have been bottomed out in the first 30 minutes itself. I'm going to show you a couple of examples how you can see these kind of momentum months. Never ever trade against these momentum players. If you're watching around 12 o'clock or 1 o'clock, the first 30-minute low is not broken out and still market is showing high confidence, that still you have to align in on the buy side only. You should not focus on you should not anticipate market to break, or even if you're seeing divergence, if you're seeing head and shoulder patterns, you have to still focus on the buying side only, no matter what kind of pattern you are seeing on the buy side. As long as high confidence is there, as long as you're seeing momentum and there are no weakness in the markets, you should not fade those kinds of markets, right? So a momentum day will be mostly the market would have been, if it is on the sell side, you would be seeing something like this. Around 12 o'clock or 1 o'clock, you'll be seeing that first 30 minutes would have been not broken for the day. That first 30-minute market high will be done in the first 30-minute itself. First 30 minutes itself, market would have been done its high, and throughout the day, market would have been going down and down and down. And that's a good momentum selling. We say like momentum selling, where the letter A will be the day stop. That is a momentum selling, right? And the same thing we apply on the monthly scale also. The scale we apply on the monthly scale, that is where we find an interesting trading opportunity at the day open. I'm sorry. Let's say That is what we talk about momentum months. To talk about momentum months, I'm going to bring in MEB looker charts. I'm going to open Nifty daily time frame, and let's say just to show the visualization of it. Show it basics. Okay, anyways, I can manage without that.
Rajendran, one question is like when there is a high confidence buying,
Yes.
are there any if they form anomalies in that? So is it an emotional buying sometimes?
Yeah, it is an emotional buying. If the high confidence is coming in and the markets are just keep on going up with anomalies, it is it's an mostly an possible mean reversion back.
Okay, thank you.
Okay, yeah. So let's take this example. Let's say I'm going to bring up an bar chart. Okay, so let's talk about momentum months. What are momentum months? Momentum months are like the month, first month of the day. For example, you take this particular day, that is the first month of the day. Sorry, this is the first month of the day here. That for that month, that high is established on the very first month itself, and then rest of the month market used to fall. And if you take the October month also, it is a momentum month because October 1. So this is October 1, right? October 1, the day high has been established, and that high is not broken. From the first day onwards, the first high has been made, and then market started moving on the downside. Those are momentum months. Those kinds of momentum months are very rare. So these are momentum. I would say that momentum selling. This is a momentum selling month and momentum selling month. They are very rare. What does that mean is that any momentum month, if you take this month so far it is where exactly it's happened. So far it is Jan high is the month. So far it is kind of a momentum month so far. So far it is a momentum month so far. But most of the months are not momentum months. You have to keep this in your mind. Most of the months are not momentum months. If it is a momentum month, you'll be seeing that activity will be happening around there. But if this month is not a momentum month, generally price will come and take it over. That Jan high, first Jan high will be taken out. So that is what I thought of saying a visualization. 70% of the month, 70 to 80% of the months are not momentum months. That means first day of the month activity, day high also be tested, day low will also get tested. So to explain this, maybe I can show you in US markets. Last month what happened is that this is where the December started. So December started with the high was here. This is the December month high, right? So initially it broken the first December low. It broken over here. Price went down, and again price came back to take the December month high also. December month low also taken out. December month high also taken out. Same case. If this month is not a momentum month, already the first month low has been taken out. If this month is not a momentum month, first month high will also get taken out. Right? Then market will be doing something else. Then first we need to check whether the momentum month is this a momentum month or not a momentum month. Usually most of the months are not momentum months. if you take in a year, there are 12 months. Out of 12 months, hardly 1 or 2 months or rarely 3 months are going to be a momentum month. Remaining 9 months, both the first days high also going to taken out, first days low also going to be taken out, most of the cases. So that also you can also keep that in your mind when the month has been started. If it's a momentum month, usually you'll get some of the signatures, like you'll be getting some sort of an news based events here. Start of the month, let's say 31st of December or 31st of March, there'll be some events will be coming in, or the RBI policy announcement. So that is where you'll be able to gauge that could be a momentum month. It will be mostly some news based activity will be happening. And it also will combine with call writing or some sort of a put writing, where you'll be able to gauge that possibly this month could be a momentum month. But most of the months are not momentum months. What does that mean is that Jan 1 high also will get tested. If it is Jan 1, whatever the high it has been made and the low it has been made, it will be tested on both the sides. So to explain this, I have to take the US market charts. If you look closely into the US market charts, so
is there any momentum indicator to gauge this momentum?
No. What only you can do is that you can go back and check the backtesting data points. You will know that. Let's look into this Dow Jones example.
Okay.
This is 1st Jan. What happened is Dow Jones opened almost 400 points down, and completely all the 400 points has been recovered. The very next day, it went and broke the 1st Jan low. Right? Think about how difficult it is. First day, there was a big gap down of almost 400 points. Almost all the 400 points has been erased, and Dow Jones closed marginally positive. The very next day, the 1st Jan low has been broken. That is fine, and if it is not a momentum month, 1st Jan high also get broken, right? So 1st Jan high also broken, 1st Jan low also broken. That is how most of the months are. The question is when. At times, what happens? First month, it establishes high and low. At times, it does this, and then it comes back and take this. Maybe it might take 3 or 4 or 5 days, and then they will snap it back. Right? So if it's combined with some sort of an events like an RBI announcement or some other events, that could be a potential top for the month. So that is where it transforms into a momentum month. So that you'll be getting some sort of signatures when there are momentum months. There will be some good call writing or a put writing happening at the day's low or a day's high. So that is where we focus. We'll say like always, you have to have that mindset that what if this month is not a momentum month? You also have to prepare that kind of scenario also. You might be seeing that markets are dropping lately, but what if this month is not going to be a momentum month? So means if there is any positivity coming in, you should be in a position to catch up to trade towards that level. So every start of the month, there is no need to hurry to catch up the train faster. So that means not every time you're going to catch at the open, you're not going to take the benefit. You're initiating a positional chart, and the positional chart going in your favor right from the month start till the end. That probability is very less. If you take 12 months, that probability that you are initiating a chart and market going in your favor throughout the month is only 1 or 2 months out of 12 months. So avoid trading in the direction of the weaker momentum. When you're finding a weaker momentum there, avoid. What I want to say is that just go in the direction of the stronger momentum. That's the key point over here.
Is it good idea to consider the option open interest to gauge the trend?
No, I don't involve open interest into my studies. Basically,
Okay.
I feel like it could create more noise. I'm not very sure
Okay.
about it, but I feel it could create more noise.
Okay.
Rather than removing the noise, it create more noise. So how frequent to measure the market confidence? So we'll be measuring the market confidence at open, market confidence around 10 o'clock, 11 o'clock, 11:30, and 12 o'clock, 1 o'clock, and 2:30. We'll be keep on repeating this confidence interval. And intermediate, we'll be checking, is there any intraday nuances? Is that the price is responding very mechanically, or is there any one-time framing against confidence, one-time frame in line with the confidence, or is there any possibilities of a double distribution pattern formation? So those are the things will be mostly those kinds of things we'll be covering during live market hours. And are there any trading opportunities? We'll be checking if where the point of control is forming, and where the developing area is forming, where the point of control is forming for the day. Is there is any odds of if there is any odds of shift in the point of control or not? What is the possibility that this particular day around 2 o'clock point of control can shift higher or lower? Right? What if the point of control is not shifting, only the price is shifting? Then what does that means? You have to keep a note of all these data points. So that is why I'll be giving you a sheet. You will be filling those sheet. Maybe starting from tomorrow onwards, I'll be doing on Monday, Tuesday, and Wednesday. And post that, I request you to each and everyone to fill those sheets. So I'll be the sheet I'll be sharing with you by tomorrow, because I need to make some more bit of changes. So I'll be saying like market open inside the range, and then I'll be saying like low confidence, I'll say low confidence or no confidence. Neither buyers or sellers not in control. Maybe it goes like this. Okay, maybe there are days what happens, it would have broken multi-day high. Around 10 o'clock, it might broken previous day high. Then I'll say like day low is your monitoring reference, because market would have been broken day low around 10 o'clock. So day low will become your monitoring reference. Or maybe you might have rally highs at the opening itself. You might have a rally high. So you'll be monitoring rally high as your reference. So any acceptance above rally high, your confidence is going to change. Then you will say like it's a high confidence markets, and then high confidence markets around 10 o'clock, high confidence market around 12 o'clock, high confidence market around 1 o'clock, and 12:30 and 3:30, the high confidence remains the same. So that kind of confidence measurement, you have to keep doing it. And what reference level I have to monitor? Should I have to monitor rally high? Let's say on Monday, market is going to break 2-day high, or market is very close to the double distribution reference level. Then double distribution balance at 10,850 level is what I'm going to monitor my key reference level. Mostly those reference level is not going to change most of the time. All in a sudden, let's say market is going to break again 7-day high. It's markets are really moving fast and it breaks in 7-day high. Then 7-day high is the market confidence level which you're going to measure, and then that will remains as your focus for remainder of the session. So maybe the key reference level which you're going to watch, it could change hardly once in a day, right? So it doesn't change, it doesn't continuously changes every now and then. Once you'll be watching one level or two levels in a day, max to max. That is the level you'll be monitoring, the key confidence level at any given day. We will not be the level will not be 3 or 4 or 5 trading levels we will not be watching. So in a day, at the open, what level to watch is that level is going to change. Maybe let's take an example here. Let's say this is one of the day high, and this is second day range. Maybe price opens here and it started breaking the previous day high. By that time, let's say the time is around 10:15, around 10:15, your confidence level will be at the previous day high. But maybe around 2 o'clock, the point of control would have been well formed. Around 2 o'clock, it comes and breaks the 2-day high. 2-day high. So you get an around 2 o'clock, or let's say 1 o'clock. 1 o'clock, it breaks the 2-day high. By that time, your point of control would have been completely formed over here. So market comes down, you can expect some mean reversion trades over there, because you know that by the time point of control would have been already 3 or 4 or 5 TPUs would have been already found. And when the price is breaking 2-day high lately and price is snapping back, it's a sign to go towards a short. So maybe by that time, by 1 o'clock, your confidence monitoring will be changed towards this level, and the remainder of the day, that level remains the same. So it doesn't shift very frequently. So you don't monitor 2 or 3, not more than 2 reference levels in any given day. Okay, and also the confidence measurement, it rarely changes. Initially, the confidence level will be one confidence level. Rarely it either changes or it never changes. It changes only once in a day, and the remainder of the session it remains the same. Very rarely it goes for the confidence level changes more than once. Okay, and POC activity, what I'm going to interpret here is that point of control is forming above day high, right? And then still forming above day POC above day high, and then point of control will be keep on forming. Maybe the activity will be widened 7 or 8. Now you know that point of control cannot shift around 2 o'clock. No possible. Maybe let's say point of control might migrate. Point of control migrated higher. So these are the activities you need to record. Or there are days around 2 o'clock you will be getting a well-distributed markets. So there are days you may not get. You know that no odds of POC migration. Point of control cannot migrate because already activity was 10 at the point of control. No odds of POC migration because TPO is 10 wide already at POC. So these kinds of observation you need to make as the time progress. Either the point of control is shifting or not shifting. Where the point of control is forming, is it forming above day high, or is it POC forming above double distribution balance? So these kinds of recording you need to keep doing it. Maybe I'll be sharing you the sheets for day 1 and day 2. I'll be recording at frequent intervals. And from next day onwards, just to practice that whatever I thought over here, you're following the same thing. To follow the same thing, you need to keep recording this information, and you have to share it back to me. Right? That's why you if there is any deviation is there, then I'll come and correct you. So I want you to start doing with Nifty or with Bank Nifty initially. Later on, you can do the same thing with any symbols. Without this cheat sheet, you can able to practice. Once you have that habit of measuring the market confidence in a right way, then you can go and deal with any kind of market situations. I'm sorry. So that's how the cheat sheet is all about. Now what we can do is we can take a short 15-minute break, and we'll again get back by 15:30. We can resume back by 15:30. Right, and until then I'll be on mute. So now we talked about momentum days, right? So if it's a momentum day, either the top will be made in the first half an hour or the bottom will be made in the first half an hour. If it's a momentum month, the starting of the month itself, either the day high or the low will be made. That low will not be broken, and that odds are very less. If it is a momentum month, the odds are only 20% to 20 to 30% that it could be a momentum month. Remaining 70% of the month, both the month high also, first day's high also get broken, and the first day's low also going to get broken on most of the months, right? So if you are spotting a weaker momentum, it is neither a buy or a sell signal. It is just an indication that momentum is missing. But if you are seeing a strong momentum uptrend, bottom will be made in the first 30 minutes. Right? Bottom will be made in the first 30 minutes. That is letter A period will be the low for the day. If you are seeing a strong downtrend momentum, it will be like the top will be made in the first 30 minutes, and the letter A period will be the low of the day. So if there is any price reversal has to happen, if any major reversal has to happen, say market is moving in a down uptrend and it started consolidating, most of the first reversal will be coming in the form of a strong momentum. So until that strong momentum is not happening, you cannot consider that as a strong reversal at all. So for example, recently last month the bank nifty does an 500-point reversal. So if you look into this reversal, market was going up. If you start seeing this reversal, it started with momentum. First minute, the market made its low. I mean, it's an A period low. That's election results. Completely reversal came. Momentum is the key here. Momentum is the key here when there was a reversal. And even when this reversal happened, I think Vivek came to my place on that day. We are talking about this. Is this a major trend reversal? Yes, it is a major trend reversal because that particular day is also a momentum month. If you take that day's high is an momentum. Letter A period is the high for that day. What was the day? That day is on 21st, right? So if you look into the 21st profile, 21st of December in Nifty, you can see that is a strong momentum play which is happening down there. When they are, you see that how the confidence is coming over here. When they are breaking the day low, they plunge below that, and then they are making the point of control over here. This is a good momentum trading. When more point of control is over here, no matter whatever your indicators are saying that overbought or oversold, don't go with your indicators. Just wait for more confirmation. It's not a good place to do a mean reversion. Don't look for a mean reversion over here, unless what you have to do here is that if you want to play a long strategy, first you have to when the price is breaking here, a lot of single prints would have been created. You have to wait for the price to come back to the previous day low, and activity has to come over here, and then you have to look for a mean reversion, right? So when price is breaking like this, it broken previous day low, and still high confidence is continuing, and in fact it also broken the multi-day low also. It broken 3-day low, and confidence is going down, price ending down. All are signs of good confidence. Again, there is one more single print zones came over here, all these single prints are indications of high confidence. Single prints, one time framing, all are indication of a higher confidence. But then you can see that if you would have been seen around 1 o'clock or 12 o'clock, that particular day, letter A would have been the high for the day. It's still not broken yet. Around 2 o'clock, you see letter A will be the high for the day. Those are the signs that they are momentum months. I mean, momentum days. Again, the very next day also it is a momentum day. The very next day is also a momentum day. And then price took one more plunge. And then third day. Yeah.
What could be the entry points for intraday?
In case of momentum trading,
right?
High confidence. Let's say you're watching this reference level. See, your entry point always depends upon the sequence of instructions. So maybe if you ask me, like for example, it is not just one information. That you have to always remember that, and it's going to change every time. For example, one of the if you look into 28th December, right? If you look into 20th December, what we are having is a stealth. We call that as a stealth short covering auction day. It'd be something like this. It established the day low, right? It established the first low would have been formed, and again price tried to recover back, but again it tried to fall, but it will not break the first low. In fact, it forms the second low. It forms the second low, and again it goes back. Again it comes try to fall in the markets, but it doesn't falls. It creates a third low, and again it does one more time. Maybe this might be repeating for 3 or 4 times. None of the low would have been broken. Lately, all the players will be in anxiety. Whoever try to short here, whoever try to short here, whoever try to short here, and whoever try to short here, everyone will try to liquidate, because mostly they are intraday players. Market will be in anxiety, they will try to liquidate. This is how a stealth auction happens. What happened on 20th of December is a stealth auction. So that's why I say like stealth short covering auction. It's a fake recovery. That's what my comment on that particular day. It's a fake auction. Most likely that particular day markets recovered. It also in fact recovered from the day low. It completely recovered all its losses. In fact, Nifty was marginally positive for that day. But you know that if you look into the profile, you can see these lows. The first low, the second low, and third low. It made 3 lows in a row. In fact, 4 lows in a row, and the day was completely. It ended positive. It recovered from the losses and then completely recovered. That is a fake recovery. That kind of recovery happens in US markets also. Maybe I'll show you US markets how the fake recovery happens. These kinds of recovery we call as a stealth auction, and the very next day onwards, it's one of the way where we say like inventory is getting long too long. Maybe next week we have one more session on inventory. There we'll be talking about stealth auction again. One of the plays where you can say like almost all the players are now loaded with their longs. Now long liquidation can take place. When you are having that kind of context coming in, that is where you can expect the market to do some long liquidation. Right? To explain the stealth auction again, I can also again spot out one more example from US market. What I'm going to do here is that,
can you take the example for 21st December? What is the entry level of momentum?
Right from the opening itself, for me, it is a short, because it is because one of the day we are having is a short covering auction. So right from the open itself, it's a short for me. Or at the day end itself, it's good to get into an shorts. Or if you are waiting for the confidence, you have to wait for the break to happen, right? And then you have to take this as when it breaks the previous day low, that will be an entry point. Maybe I'll tell you how I had seen that particular day. We had done a webinar on 20th, I think. We done a community webinar there. I'll show you how I seen the market on that particular day. So market profile. Yep, right? Yeah, here. So here we discuss about the stealth auction which happened in Nifty. So I'm going to skip most of the parts. So wait, mute it. Okay, so here I was talking about the stealth auction here. Up down analysis. We can call that as an order flow. If you go to Nifty charts, this is Nifty today's data points. Maybe. Just give me a second. I'll. here. Okay, let me explain how I seen that.
Prominent park, and it also cleared the first December high, which is very much anticipated. We anticipated this kind of moves, and I also explained in the last webinar about this as why the price has to make and it has to break the first December high. So we can recollect it back. And, but tomorrow we are talking about G2 high here. So there's a major G2 high formation over here. That is has to remain, then the G2 high. There is a G2 high formation over here. Then tomorrow morning you should be getting that to turn negative. If at all it turn negative, it should start coming down. And of course, not much of anomalies. Only 3 anomalies are witnessed, so we don't call that a core structure. But price should start opening here, and it should start going down. It should start going down towards the. There's one more G2 low here, I think. So G2 low here, G2 high here. This G2 low is T+1, already 1 day is over for that. And this J2 low is a baby, it just formed today. And that G2 high, it's also come as a major market top. So your analysis, it's tough to say whether they will, which side the market might go. Frankly, I don't have any idea which side the market will go. But I believe, based upon the market opening tomorrow, we could conclude whether it's a top or not. I'm just thinking whether it's a top or not. I'm not very sure as of now. But if tomorrow the sentiment is turning negative, then we can frankly conclude that G2 higher top could be a potential major market top for at least for the next 1 or 2 months, right? So means we might be very close to the upper extreme. That's what we can think about it. Maybe one of the places, if you're finding follow through on the downside tomorrow, one of the good places to initiate positional long. I'm talking about positional long. Maybe tomorrow.
Rajendran, what about G21, G2?
We'll be covering next week. We'll be covering it.
Okay.
Right. So see, it's always where to enter, where to exit. It's always complicated. It's mostly based upon the surrounding situations. Right. 1,000 times you're going to ask the question. I can always say that. So here, if you look into the confidence, why I'm talking about the market top over here when I'm looking into this current information. What are the information I'm presenting you over here? The G2 high, which came at the major market top, right? It's one of the big swing, and it forms a top. It forms a G2 high pattern as well, which we will discuss in the next week session. And I'm also seeing an still short covering rally, which is a fake rally. What are the rally which is coming over here? You look at the lows, the low 1 at low at 2 and low at 3 and low at 4. That's saying that it's a fake recovery. All the odds are there that even if I'm gonna market is gonna open over here, because all of a sudden market has to open gap down, the Dow Jones has to crash or some other market has to crash, then only we can open a gap down, right? In fact, Dow Jones crashed, but despite that, what happened here is that market opens inside the range. Initially, it was doing nothing. It was doing some lot of activity. So we are expecting, if it is a good sell-off, it has to go down, and because it's a fake recovery, it's a sign that market is completely going to reverse. It's one of the signs that market is going to reverse, but market close at the extreme, right? So that is why I said, like, if market has to go down and it has to keep going down and it has to go and hit the G2 low, which usually gets cleared in T+2. Usually gets cleared in T+2. That is the level. What I am talking about is 10,840. So this webinar will be done around 8 o'clock. By that time, Dow Jones are positive. And so let's continue here.
Rajendran, one question now. Why do you say that it's a weak recovery?
It's a stealth auction. Mostly intraday players are trying to short the market because of global weakness. But despite that, market is moving against them. But now strong mover, once all the weaker hands are out of the game, now strong player initiates the game there. That's how maybe to spot out the same example, it happened last Friday in US markets. If you don't know why the US market made a 4% move, I can spot a similar examples there. So just give me a second. I'm going to set up the US market charts. What I'm going to do here is I'm going to close this. Right, I'm going to disconnect my data feed. Already disconnected, so I'm going to open Kinetic. Kinetic or CQG, you'll be able to get data for US markets. So file new chart.
Is that free?
CQG is free for a month. So
Okay.
if you can go to Ninja Trader and you can sign up for, it will ask whether you want to data or not. If you are subscribing for data, you'll get the CQG data where you'll be able to get US mini, crude, NASDAQ futures, all those futures you'll be able to get in real markets for 1 month. After that, it will be chargeable. The charge will be coming anywhere between $100 to $140 per month. So this is US mini charts here. And I'll be showing only for the current, only for real-time market hours. ES mini. ES mini have two sessions, if you remember. One is regular market session. Second one is overnight market session. So whatever the profile I am plotted is only for the regular market hours. So if you look at this is regular market hours, and you split this profile and check, it's a ulta of what we seen in the stealth auction here. It forms an high, first high, second high, third high, and fourth high, and price went down. Right? That is a fake down move. That is a fake down move. That means next day onwards we are going to see an exact opposite reaction to this. Only the weaker hands will get into the shorts in this market mode. And next day onwards, market snaps back. It snaps back and it went up. And in fact, it was the US market went up, ending up like.
How to say it's a fake move? I'm not getting that.
This is how to say it is a fake market recovery. Okay.
Fake movement.
See, based upon the market observation only, you can say that it is a fake recovery. You see that 1,000 times. These kinds of stealth auction doesn't happen all the time, right? So these kinds of auction, right? So it forms a high, again it drops down, it forms a high. It's dropped down and it forms a high. It drops down and it forms a high. So every time the players are trying to push, whenever a new high is coming in, the players are trying to go long, and then market falls. They're trying to go long, the market falls. They're trying to go long, and then market falls. So it's kind of a frustrated. All the frustrated longs in the systems are getting out of the system, and most likely the shorts are going to get trapped. Now the smart money makes the movement there, right? So if you find that this kind of dumb activity, then you ought to be really cautious.
Are you identifying these things in a volume or something like that? Just I wanted to understand your pulse. How come you are identifying these fake movements? That's all. Order flow, is it showing any low volumes?
No. This is, you can spot it from the profile itself. These kinds of trading activity you can spot it from the profile itself. So maybe if you want to know more detail about stealth auctions, I done a short article about it. So market profile stealth auction. So I never seen stealth auctions happening frequently in Nifty or Bank Nifty. So very recently it happened in Nifty. It happened in Bank Nifty as well. Sometime back, 3 months back or 6 months back, I observed once in NASDAQ. Stealth auctions, to be precise, they are very rare. They are not very frequent. So you see that this is one of the stealth auctions which happened sometime back in what is this? This is S&P SPX ES mini US market charts. So you can go and study more here what a stealth auction is all about, and most of the time it will be kind of a fake recovery. That's what you can anticipate from stealth auctions. And most likely intraday traders, they try to short, and they end up most likely they end up getting trapped. They mostly end up getting trapped over here, and over here. Minimum you will be finding 3 to 4 lows, and out of anxiety they will cover all their positions, and that's why you'll be seeing a last spike coming in. Even if you look into the Nifty charts, if you look back into the Nifty charts, you look back into the Nifty charts, or you look back into the ES mini charts, they are out of anxiety, they are closing down their positions, and finally they're giving up all their longs. They try to enter longs and they're not able to succeed there, and finally they get out of the shorts. That one thing is your one more information that you have to carry forward that helps you to identify. For example, the same thing I posted in Slack as well, that there is a stealth auction which is going on in stealth auction. So Friday evening I posted about it.
How often it happens in the Indian market?
I seen last 3 years I seen only twice or thrice.
Oh, okay.
It doesn't happen frequently. At least in Nifty, it doesn't happen frequently. In Bank Nifty also, it doesn't happen frequently. But when that recovery came last time, we are able to spot in Nifty and Bank Nifty. Every day we used to take a record of it. So that is one of the reason in the Excel sheet I had this whether the day is a stealth auction or not. Stealth auction, where is stealth auction? Yeah, stealth auction, if any. You have to remember that if it is yes, then you need to you have studied that there is a stealth auction. Then you can prepare your trading strategy accordingly. Then if the market is open like here, how you have to prepare. If the market is opening there, then how you have to prepare. I cannot go and come and tell you live markets where to enter, where to exit. Just by looking into the charts, I can do always post-mortem analysis, right? Anyone can do post-mortem analysis, and anyone can do tell a good story about it. But live markets, it's you have to put your mind. If you are seeing a stealth auction, then you need to aware that it's a fake recovery. Possibly we could rotate back. So what if the market is going to open inside the range? How you are going to handle? Where you're going to wait for the opportunity? Where you're going to short the markets? It's you have to prepare, and you have to come up with a solution rather than me coming up with the markets all the time. Anyways, I'll be coming up with, and I'll be guiding you over a period of time. But over a period of time, it should be you that you should look into the charts. You should come to the context level, and you should be able to come up with the right kind of context, right? And all these conditions, right? So once you are able to spot all these conditions, you will be able to figure out how you should be able to handle this day or any kind of day. Okay, anyways, I'm gonna close Ninja Trader because I have to restore all the settings back, and I'll reopen again. In the meantime, we look into the PPT.
Rajendran, in between,
Yeah.
what major difference we will find between Finalgo and Bell TPO?
Many differences. One of the you just go and take the trial and you can explore it. One of the major differences, like you won't find volume profile there, whereas here if you look into the let it open so that I can explain.
Volume profile is there in Finalgo.
Volume profile is there in Finalgo. I don't know, but it is not there in the market profile charts.
Okay. So inside market profile, okay.
Yeah, inside market profile, it is not there.
Okay.
So maybe, I mean, I'll take those things later on, but there are a lot of significant, lot of the reference levels, what I requested. So Vinod has been continuously working on that, and a lot of differentiation we had made on not only with Finalgo, with most of the competitors. Whatever the changes we are doing, whatever things which we find that it is a legitimate strategy. So we try to bring out that. So like let it be a G2 high or a G2 low, failed auction highs. You won't find anywhere else in the planet. No, none of the trading analysis software has an automated reference lines. Only Bell TPO provides all those prominent point of control. None of the market profile tools brings you automated reference line. In fact, it supports scanners. Maybe we talk about those scanners later point of time, where if you want to know, you want to plot 10 symbols and you want to know where the G2 high or G2 low is there, you'll be able to get those reference lines in the scanners automatically. So it also comes with scanners. The Build Ultimate profile, it comes with scanners, but I believe none of them in the market profile world, they provide market profile scanners. So those scanners will scan for ORR setup. Those scanners will guide you what is the yesterday's value area, what is the yesterday's point of control, whether there is any prominent point of control nearby, whether there is any ORR top or G2 high, G2 low, poor high, poor low, anything is there, it lists down as a report. Right. So anyways, we'll focus on the charts here. So acceptance or rejection, what I say, whether we are using the term acceptance or rejection very frequently. So what is those terms means? When we are monitoring any reference level, let it be a short-term reference level or let it be intraday reference level, I say the price is accepting above that reference level. When I say that, that means price goes up and point of control is building above and staying above that level, and maybe one or times it might try to take up, but still price point of control never shifts above this level. So we say like price accepted above this key reference level. Maybe the price accepted above previous day high, price accepted below previous day low, right? So those are the terminologies we'll be using. When I say rejection, it means like the same reference level, price might be going up, but then it rejects there. Again, try to go up, it rejects there. Most likely point of control is building below the previous that key reference level. Then we say like it is a rejection. Or let's say the level is there and price opens here, it try to go down but it rejects. Again it try to go down, it rejects. Then we'll say like it is a rejection zone, right? So we'll be using rejection and acceptance above the short-term reference level to check whether it's a high confidence buying or a low confidence buying. So here we are talking about short-term reference. We're talking about short-term reference. The short-term reference can be P-shaped balance, a B-shaped balance, or a double distribution balance, or a triple distribution balance, or a spike base. Right? When such kind of short-term balance are forming, and we will say it's a high confidence buying if the price is able to, the point of control is able to build above rally high or any other short-term reference level, then we can say like it is a high confidence buying. Right? If it is going to reject, if you are seeing a rejection, let's say there is a short-term reference level, let it be a double distribution balance, and the price is getting rejection over there, then we'll say like it is a low buyer confidence. So buyers are trying to push above the double distribution reference level, but I'm getting a rejection here. Again, buyers are trying to push above the double distribution level, I'm getting a rejection over there. Point of control is building below the rally high or any other short-term reference. In this case, it could be a double distribution balance. Then my conclusion is that it is a low buyer confidence. In that case, you have to look for a mean reversion trading opportunity. In that case, you have to look for a mean reversion trading opportunity. All right. Again, if it is acceptance below previous day low, previous day pullback low or any other short-term reference. Let's say you have a reference level. Let's say this is your one of the reference level. Let's say this is a spike base. If you're getting an acceptance below the spike base, then we'll see this reference level as a high confidence selling. Even if the price is trading inside the previous day's range, I'll turn that as a high confidence selling. You have to look for a trend following on the downside. Likewise, again, when it comes to rejection, let's say you have a reference level and you're getting a rejection at this reference level, but still the price is staying above the reference level. Point of control is building above the reference level. In such a case, we call that as a low seller confidence. Who are trying to sell below this level, they're not able to build a point of control below the reference line. So that point of control stays above the reference line. Then we can say that it is a low seller confidence. Again, you have to look for a mean reversion. You're getting my point? Any doubts on this? Okay, if there are no doubts, then I'm moving to the next sheet. So that is one special case to monitor. At times, what happens is that let's say, and it will be a 2-day high. You'll be monitoring a reference at 2-day high, and price opens here. It take the day high, again come down, take the day low. It will keep on wavering around key reference level. More than 6 TPOs or 8 TPOs would have been formed at a key reference level. So at this reference level, more than 6 to 8 TPOs would have been formed. In such a case, what the last 45-minute trading activity is happening, that is very crucial, because let's say last 45 minutes market moves up and next day you can anticipate a continuation. Or let's say last 45 minutes market moves down, next day that impact will be there on the very next day. So if it is more than 6 to 8 TPO trading activity is happening at the key reference level, then one has to monitor the last 45 minutes of the price action. If the price action in the last 45 minutes stays above the key reference level, then initiate long for the next day. So probably that will be, you can use it for your BTST longs or BTST shorts. If the price action in the last 45 minutes stays below the key reference level, then initiate positional shorts, right? So these kinds of activity, at times it happens, price will be breaking 2-day high, but instead of doing some high confidence activity, price will be continuously moving around back and forth around 2-day high. Or at times what happens, there will be a pullback low will be there. There will be a pullback low will be there. Market opens here, it went down, again it go back, it went down, again it go back, again it went down, it go back. It does most of the activity. If you see this level, that level is where the point of control also exactly get built, and that level widens almost 6 times or 8 times or 10 times in a day, and that becomes an when it is happening last 45 minutes, you have to be really careful. And whatever the last 45-minute direction is there, if the last 45-minute direction is down, then you again initiate short. If the last 45-minute action is positive, then again you go with the direction over. That is a special case monitoring when you are monitoring the confidence. The only thing is that activity, if it is widening at 6 to 8 TPO at major key reference level, then only you have to watch for last 45-minute price action. Otherwise, no. So next comes the opening confidence cheat sheet. It's what we talked in the morning, the open drive, open test drive, open rejection reverse. It's the same thing. If the price opens gap up, high buyer confidence, go with the direction of the confidence. If the price opens gap down, it's a high selling confidence, go with the direction of the confidence. Again, you have to do a trend following. But if the price opens gap down, let's say this is my previous day's range, price opens gap down, opens below the previous day's low. Instead of that, all in a sudden it gets back into the previous day's range and started building point of control over here, right? So it's a low seller confidence if point of control builds into previous day's range. So in that case, they are weak early morning sell. The sellers are not serious. These sellers who are shown in the morning, the gap down, they are not serious. Look for mean reversion trade. So in that case, you have to position yourself into a mean reversion perspective, right? The same way, let's say price opens gap up. Here is the previous day high and previous day low. Price opens gap up. All of a sudden, price got back into the range. In such a case, and price started building by A, B, C, you know that where the point of control is going to get built up. If it is not a serious sellers, if they are serious buyers, what they do when they are getting back into the range, they get back up, they will do point of control above that level and they take it further from there. But if the point of control is building on the downside, and in that case, you have to look for a mean reversion setup. Let's say there is a P-shaped profile, then my target will be only towards the P-shaped balance, because plunging below the P-shaped balance and building a point of control is going to be very tough, because already my point of control started building over here. So again, either it can plunge so that I can use that P-shaped balance as my reference. That's what maximum I can do. So based upon what is my what is happening, what is the surrounding situation, accordingly I have to finalize my target levels. So yeah.
Ranjan, when we say opening, is it after A has formed, or when we look at this?
So this you'll be looking at the opening itself. At the market open around at 9:30, you get a fair idea. By 9:30, at times what happens, by 9:30 or 9:45, 9:30 itself price opens and it get back into the range within 10 minutes or 15 minutes, it get back into the range. So by that time itself, you know that it's the opening confidence is not a good confidence, it's a low selling confidence.
So first
15 minutes, you'll be able to come to know that.
Okay, thank you.
Yeah. And the price opens inside the range. It started trading inside the range. Point of control is building inside the range. It is not breaking the day high. It is not breaking the day low. There are no rally high to monitor confidence. There are no pullback low to monitor confidence. There are no spike references. In such a case, we call that as a low confidence. Neither buyers are not confident. Neither sellers are not confident. Do nothing. Wait for something to emerge. Maybe the confidence might emerge in the form of a single print. The confidence might emerge in the form of an one-time framing. Wait for the confidence to come. So until then, don't do anything. Most of such days will end up like an inside bar. If the low confidence will be at the 9 o'clock, low confidence at 10 o'clock, 11 o'clock, 12 o'clock, 1, 2, 3, all a low confidence means it is an inside bar. So throughout the day, you would have been not done any trading at all on the inside day ranges. Basically, you don't need to predict an inside bar. Throughout the day, it will become a low confidence day. Nothing much. Mid of the day, how to monitor the confidence. So mid of the day, what you'll be seeing here is that you'll find many interesting trading opportunities during mid of the day only. Let's say you have a very big range here. The next day, market opens at the center. Initially, it will be a low confidence. It will be moving like a low confidence. And all in a sudden, what happens? Mid of the day, it goes back and take up the day high. If they are not serious buyers, they will rotate back. That is why the mean reversion trades goes towards the point of control, right? So, or the same case will be applicable for the downside as well. Initially, you'll be having a low confidence market, and they tend to break a 1 day low or 2 day low during mid of the day, but they eventually rotate back. Usually, they go towards the point of control, or at times they completely recover back. At times they completely recover back. During middle of the day, you'll be able to come to know that, so that you can strategize accordingly. So that's one of the example. What I given is the S-Bank example in an S-Bank charts. Let me go back to the S-Bank charts. You go to the S-Bank charts. Sorry. It's the same thing. So initially they broken day low, right? So by mid of the day, you're seeing around 12 o'clock or somewhere, price was trading around over here. Price was trading around here. Point of control was built over here, and that is a way where you can expect an mean reversion, which is coming all in a sudden, because it broken 2 day low. It broken 2 day low. If I draw a reference line at 2 day low. Reference line, horizontal line. It's a 2 day low. If you draw a reference, kind of a fake out, they try to break. As I said, the it's a multi-day breakout. When it is making a multi-day breakout, mostly if it is breaking at C period, it stops. We call that as an ABC elongation. It stops there, and price coming back, it is a sign that we are going to do a complete mean reversion back. Right. So again, I also explained in one of the examples how to look for an ABC elongation when there was a multi-day breakout. It was a signature. It's one of the signature trade to look for a mean reversion where it completely loses all its. It completely erases all its gain and completely move to the other side. So if you are in short, you have to cut off your position. If you are longs, you have to. I mean, you have to continue to longs if the price is coming back into your favor. Let's say price broken the day low and it's snapping back. Point of control started building over here, and one of the best places to look for a complete mean reversion setups towards the other side.
So Rajan, in this case, the reference was the 2-day low. That was the prominent reference, is it?
That is the reference for that day. For that day, that is the only reference.
But if you see, there's a failed auction sell, right, and then the poor low. So there are two references which needs to be. I mean, the probability of visiting.
No, failed auction has been created end of the day. End of the day, only recognize that it is failed auction. And poor low is one of the references. Poor lows are never our target places. Poor lows are indication that level. Most of the time, poor low will be tested. I agree to that. But fading the poor low is not our trading strategy. Always fading the poor low is not a trading strategy. For that, we have one more signature trades, which I'll be talking on next Saturday. I'll be talking about it. We call that as an exponential poor lows or exponential poor highs. We'll be talking about those things. But one poor low is there, we don't fade. If there are multiple poor lows, 3 poor lows in a row or 5 poor lows in a row, which is not unclear, then we go and fade it.
So in this
always see this, there is a poor low here that gets faded. So, but that usually it used to happen in the markets. Fading the poor low is never our strategy.
Okay.
Yeah.
Because the probability. Now, in this case, the failed auction sell, that's a reference to carry forward so that.
That's a reference you have to carry forward. That's a reference to carry forward. But since it is a stock, it's a 50-50 probability that.
Okay. Got it.
If it's a Nifty Bank Nifty, definitely we have all our ears to it. But since it is a stock, we don't give much weightage to it because it's not part of Jim Dalton's principles, but it is from the Ray Barra's concept. But still, yes, one reference level you have to keep in your desk, right? So that when something is when you are finding any reversal point, one of the target zone is your failed auction zones.
So in stocks, the failed auction zones are we still have the higher probability of getting the.
No, it's only 50-50. It's only 50-50.
Or even failed auction zones. Oh yeah.
Yes, it happens or it doesn't happen. So we don't play 50-50 game here when it comes to failed auctions. So because at times, if the failed auction is not repaired, it could become like a kind of support zone, and you'll be losing the other side of the opportunity. So stocks, it's not advisable to follow. Whereas Nifty, you will get more information about the Nifty, more data points you'll be able to get, and since it's an index, you won't get an all in a sudden 5% activity or a 10% activity. It's safer to trade in index than in stocks.
Okay. Rajan, at the end of the day, will you be able to analyze DHL chart to see for the
I'll look into it.
Structure and all that we saw today?
Fine. Once we are done with the session, we'll look.
Yeah.
And Rajendran, this is Rohit here. So can I say that Yes Bank has formed a rally high also by the end?
Once again, let me check. Yeah, it's an rally high. It's kind of a rally high price. It does a rally and then it doesn't. It's a pullback low. It's not a rally high. It's a pullback low.
Okay, thank you.
Yeah.
So one last question, Rajan. So in this case,
I'm sorry. One more time. Once again, I'm sorry. It is not a rally high or a pullback low because whenever you are seeing in single print zones, right? So there are no rally highs or pullback low. We call that as a kind of a double distribution. So it's a double distribution day. So when there is a double distribution or a triple distribution, either it can be double distribution or a rally high. So when double distribution is there, double distribution takes the precedence because there is a single print in between the profile. So there is only one reference level in this particular day. That is only this level. So this is the only level to monitor on Monday. If let's say S Bank opens higher and it's coming back, so maybe if you have to look for a rejection or acceptance over here.
Okay, fine.
Yeah. So it's not a rally high. Sorry, my bad. Because you need to look for a single prints. If there are no single prints, let's say this single prints is not there, definitely I'll consider that as a rally pullback low. Since there is a single print, I have to give a benefit of doubt. I have to give it as a double distribution reference.
Pullback low plus also
No, it is never a pullback low plus double distribution. Always only double distribution.
Right.
Yeah. If there are no double distribution, then automatically I would have taken that as a pullback low. Since there is a single print zones there, obviously the high priority goes to not to the intraday reference. It always goes to the short-term reference. So we call this day as a double distribution day, and the top of the balance will be your reference level for Monday trading. Yeah, let me come back. So that's what the mid of the day confidence will be looking for. If you want to spot a mean midday weaker hand sellers, always we do a mean reversion. If you are able to spot a midday weaker hand buyers will be able to spot like something like this. It's going to happen. Most of the time, day activity will be happening in the middle. It will be mostly a low confidence day. Mid of the day, they go and take the day high, and they come back. That is a sign of that is a critical sign for doing a mean reversion against those weaker hand buyers. I think we already talked about this. Repeat of the slide. It's the same thing. Yeah. So same thing applies for the P-shape profile also. How to deal with the P-shape profile. When there is a P-shape profile balance, acceptance is coming above P-shape balance. Point of control building above P-shape balance is a high confidence buying. And if any rejection is happening, basically it's a low buyer confidence. Similarly for acceptance below P-shape profile, B-shape profile also, any activity happening below the P-shape profile. Let's say I'm getting a B-shape profile. The B-shape profile distribution is my reference. Any activity is happening over here, point of control is building below that. That is still a high confidence selling. I would say that the selling is an low confidence if I am able to spot a B-shape profile. And the very next day activity started coming in above that, we will be looking for an it's a low seller confidence. Who were going down below the B-shape profile, it's a low selling confidence. Maybe you have to look for an long point of control started accepting above that reference. POC has been building above that, so you need to look for a long direction here. So how to spot high confidence market? A high confidence market can come in the form of gap up or gap down, one time framing up or down, double distribution or a triple distribution, spike up or spike down. So maybe I should say instead of double distribution or a triple distribution, I should say in form of single prints. So I remove this. It's nothing but double distribution or a triple distribution or a spike up or spike down. But instead of saying that, I should say in the form of single prints. Single prints. Uncleared single prints. The single prints during intraday. That is what it can either transform into a double distribution day or a triple distribution day. So it's something like this. Like let's say I have a previous day high and previous day low, and initially activity was happening with a low confidence. Neither buyers are not serious, neither sellers are not serious. All in a sudden, I'm getting a single print zone which breaks the previous day low, and remainder of the day that single print is not cleared. Instead, it forms one more distribution, or again it breaks, again it forms one small distribution over here. So those single print zones are the one which we say that when it breaks and creates one more distribution, that particular day we say that it's a high confidence markets. So all in a sudden markets are transforming into high confidence sessions, or all in a sudden, and high confidence can also come in the form of one time framing. As I said, initially it will be a low, dull, boring confidence. It will be no confidence. Neither buyers are not serious, neither sellers are not serious. But all in a sudden, the one market started doing one time framing down. Very slowly, it will be start doing one time framing down. So it is no confidence, and then sellers have started appearing. You have to go with the direction of the one time framing. So the by here itself, we will be saying that it's an high confidence selling. Again, market tend to go down. Right. So morning I had given a rule base. You have to combine with those rule base there. So these things, which one time frame to fade, which one time framing not to fade. So if the markets are not showing any confidence and one time framing is happening, go in the direction of the one time framing. Go in the direction of the one time framing. We also seen some couple of examples how to deal with those markets. And I guess if there are any questions on confidence, I can answer you. Otherwise, we are very close to the end of the session. We can look into some other charts. I can take questions. This is a cheat sheet which has to be mandatorily followed. It radically transforms your the way you're looking into the market. Most of the time, it will keep you in a no trade zone. It will not allow you to take a trade. It keeps you in a neutral position whenever you want. Whenever the market are transforming into a bullish mode, you will be focusing only on the bullish side rather than focusing on the wrong side. So most of the time, it guides you in the right path like a GPS, and it makes you to stay focused, and it also makes you when to shift your focus. It informs you with a proper guidance. So that's how the framework has been built to trade in any kind of market situation, to trade in any kind of high volatile markets or low volatile markets. You will be able to take a right and proper decisions. If you're going to include market confidence, maybe even if you can combine with your indicators, and you know that even if your RSIs are overbought, you are seeing a high confidence market, maybe you know that it is not right time to buy. Maybe you will start waiting for your opportunity there. So if once you started looking into combining market confidence, maybe with your trading strategy, let's say I'm having a Bollinger Band. You are having a Bollinger Band, and price moves to the upper end of the Bollinger Band, and the very next day, you know that Bollinger Band is there. We use Bollinger Band as a mean reversion, so we use. My expectation is this, but instead market opens gap up next day and started building value area above previous day high. You know that even though price is trading above the Bollinger Band, you know that it's a high confidence market. Better shut and keep. Don't do anything. Watch the markets. If you still want to short the markets, when it's showing high confidence market, don't short. Or if you want to short, what has to happen is that, let's say the same Bollinger Band is there, price opens here, it touches the Bollinger Band, it got back into the previous day's range, activity is building lower, then you can look for a mean reversion. So you can classify, you can combine your technical indicators or combine your trading studies, and you can combine your confidence. Confidence, you have to use market profile, right? And you can combine with any other technical indicators. Maybe you can combine with order flow. You can combine with price action studies. You can combine with your Elliott wave studies. But confidence, watching the market confidence is universal, right? So it can be applied to any kind of markets. And it can be combined with any of your trading indicators to take a better trading decisions. Yeah, any questions?
Sir, you not covered spike.
Yeah, I haven't covered spike. Yes, thanks for reminding me. I'm going to cover the spike. So inside here, market profile. this. So it's a spike. A spike will be something like an last 45-minute downside. You can see in this case, what is happening here is that all in a sudden price is breaking with a single print in the last 45 L period. L period is the last 45 minute and the M period is the last 15 minute. So 245 L period starts. One of the day what is happening is that lately the markets are breaking and it just goes in one direction, where you see that the point of control will not migrate. Point of control is almost here 8 TPO wide, 7 to 8 TPO wide here. And lately only price is breaking. You see that price breaks right from here. Right from here, the price is continuously breaking down. And that is closely an 120 points of movement in the last 5 minutes. I mean, last 45 minutes. Last 45 minutes or at time, it can be last 30 minutes. Anywhere between last 30 minutes to 45 minutes. If it is coming up with a single print zone, you see that there is a single print zones. It spikes down, it moves down throughout the day, it moves down and it closes at the day's low. Price closes at the extreme of the day low, then we call that as a spike. And that spike base will act like your reference level, right? So that is a short-term reference. And if you want to measure market confidence, let's say price opening gap up above this level, opening above this level and maintaining point of control is a bullish activity. You can expect a bullishness. Maybe the bullishness can also come like this. Price opens, it spikes up, activity builds up. It is also a bullish setup. Whereas, let's say price opens here below the spike base, price opens here and it does a lot of activity. And middle of the day, it goes and tests the spike base and come back in because that is a low confidence buying. It broken so that we saying that there is a buying above spike base, but that spike base got rejected. Again, maybe the rejection might happen once or twice. That is a mean reversion opportunity to fade towards the day low. Or maybe if the price is opening here, let's say the price is opening here, more activity was happening over here. Mid of the day, price took the day low, but eventually the players are not interested, the sellers are not serious, price come back in towards a point of control. That is again it's a good information to look for a long, and you wait for the price to accept above the spike base and you go for a positional long again. And next day also you wait for the price to accept above the spike base and start trading above the spike base. So using the spikes base are very interesting setup. Whichever the day market is going to open, you can be able to handle it. If the market opens over here, it's a clear bullish sign. And what should not happen is that point of control should not form below the spike base. So if it is forming above the spike base, you can expect a complete reversal. Means yesterday was a down day. Market, despite all the negativity, market is opening above the spike base, or opening somewhere and accepting above the spike base. They are positionally meant for long activity. Most of the time, what happens is, if the markets are showing a deep downtrend, next day market opens casually, it does more activity. It took the day low, there won't be no serious sellers. It goes up and there won't be no serious buyers. Point of control will be mostly forming over here. Market ends down, your value area will be down for the day. And that's how most of the days ends. But despite all these odds, if you're seeing an acceptance above that, spike base started building above spike base, that is an immediate long. Immediate long, at times it will be breaking one day high, or it can even break 2-day high also at times. So that gives a maximum opportunity. So you're seeing a spike base, next day price start accepting above that. That is where you have to be initiate long and you have to monitor for longs. But if it is happening middle of the day, you have to be really cautious. Middle of the day, if it is happening, you have to be really cautious. Price could snap back and all those single prints can get cleared. and price move to the point of control, and even it drops down to the day low. So that is what mostly it happens if there are more activities are happening between the spike base and the spike low, between the spike base and spike low. So the spike can also happen lately. So some people say this is a P-shaped profile. For me, it looks like a P-shaped profile, right? It is not a P-shaped profile. The shape is P-shaped, but we don't call it as a P-shaped profile. In a P-shaped profile, price has to start from the downside. It has to rally in the first 1 hour, and then balance has to start. Whereas in this case, first balance is building, and lately it is breaking down. But if you look from the structure wise, it is a P-shape, but we don't call that as a P-shape. Most of the beginners misunderstand P-shape profile. For a P-shape profile, always price has to start lower, spike higher, again distribution has to form. For a B-shape profile, price has to start at the top, drop down, and then balance has to form in the later part of the session. That's how we call that as a B-shape profile, right? So many times people confuse spike with a P-shape and a B-shape profile. So make sure that you're not confusing spike with a P-shape or a B-shape. P-shape is short covering rally, B-shape is long liquidation activity. So again, there are many rules, 80% of the rules. These days, we are not following 80% rules. Again, there is one more thing called minus development. We are not using minus development anymore because both 80% rule and minus development are Peter-Steinmeier concepts. Last time we checked with Jim at Bangkok around 2016 in a traders conference. So he said that he is not using 80% rule anymore and minus development anymore. We asked why you are not using. He said like after market become completely electronic, all those simple trade setups are no more working. So 80% rule and minus development rule, we are not following. Previously, when we are beginners in market profile, we followed, but they are older concepts, which is no more applicable for electronic markets. Right? Where Peter Steinmeier itself, he said like he's not trading 80% rule anymore. Once the market become completely electronic, all the edge has been lost. So he don't trade 80% rule anymore. That's what he said. And Jim also doesn't use 80% rule. So we also stopped monitoring an 80% rule or a minus development activity, something like that. So gap trading rules, we already talked about it in a high confidence. Nothing much to talk about it. I think spike rules has been covered. Or it's nothing but a last 30-minute sell-off or a last 30-minute spikes. At times, you can most of the spikes, point of control will not migrate. Only price will migrate. So where the spike is coming, it really matters. Okay. So if the spike, let's say the spike is coming at a major swing high, market is doing activity here. And let's say one of the day, this is my IB. My IB initially broken on the downside, and it also started trading balancing. And lately, the spike is coming in. It ends up like a neutral extreme day. Neutral extreme day is where IB got broken on both the sides, and that day also turning like a spike, right? Then I will say like inventory is getting long to too long. Maybe the market, we are very close to the market top, or the market top is already done for the day. Either next day onwards, the spike is very crucial here. Either market will open below the spike base, you will be seeing a sell-off, or the market might be doing, let's say the market might be doing something like market opens one more day higher. It does balancing activity. Most of the balance will be coming over here. And next day onwards, it started accepting below the spike. So either way, if this is happening at the major swing high, one thing you have to know that we are very close to the major market top. If market swing high is followed by a neutral extreme day and it's a major swing high, we are very close to the market top. Either next day onwards you can anticipate, or very next day, day there will be a balancing activity followed by that market could tend to go down. Right, so spike rules are very important again. And again, next week we'll be mostly looking into G2, G3 kind of references. We'll also be looking into 2-day balance, how to deal with the 3-day balance, how to deal with the 4-day balance, when there is a 4 days of continuous activity of balancing activity is happening, how we have to deal with those 3-day and 4-day balances. And look above the balance and fail, look below the balance and fail. There is one more session which is pending there. We'll talk about the profile structure, mostly about the profile structure from the next month, next Saturday onwards. That will be helping you to explore even more better trading strategies there. So look below the balance and fail, look above the balance and fail. Again, those are concepts of Jim Dalton's, some of the principles from Jim Dalton.
Arjun, I have one question.
Yeah.
So there was a speculation like a gap up around more than 500 points that happened a month back. That can be actually captured very easily through the market profile. Is that so?
Nifty, 500 points gap up.
Yeah.
When?
I think Bank Nifty.
See, if it is on a G3 level, then we can anticipate that kind of gap ups. Surrounding factors are more important. If the surrounding factors are showing something like that, you'll be able to go with that kind of trades.
Okay.
For example, one of the day, I can tell you one of my past trades where there was a ORR top formed. Okay, ORR top formed. ORR top. That's a weaker ORR, in fact, and the price started sliding down. There was a deep crash, and again market started crashing. It throws one more prominent point of control. It throws one more prominent point of control, and there was a neutral extreme day. Neutral extreme day. It's kind of an the entire markets are crashing down, right? And this is the first day high, and this is Diwali. In fact, the day there was a 500-point crash came in Bank Nifty. It was a Diwali, of course. So there, from here to here, it's almost 1,000 points. It's almost 1,000 points wide. 1,000 points wide. So in that case, all saying that this is a stop loss over here. There is one more prominent point of control over here. One more prominent point of control here. All are the short-term sellers are trying to coming into the markets. You know that they will be 3 to 7 days. They give a commitment, but they will eventually reverse. One of the day there was a deep crash is coming in. That is on Diwali date. Last Muhurat trading. It was last Muhurat trading, and a lot of reports are coming in. In fact, RBI is issuing a framework rules on banks. So that some bad news is getting generated for bank. Despite that, the very next day market opens gap up, and it forms a value area. Second day, it was again slightly one more higher value area. Third day, it opens 800 points higher. It breaks the ORR and it completes the auction there. So because that gap up, 800 points gap up came because of bank recapitalization news. But if you look into the structure-wise, all the downtrend players are mostly weaker hands, which you'll be able to evaluate from the profile structure. Okay. News is finally, it is coming at the last minute. But if you understand before those news, whatever the structure, what you're presenting in front of you, all are saying that it is a weaker structure. The ORR which comes there, it's a weaker ORR. The prominent point of control and one more prominent point of control, and finally the final climax sell-off which happened during Diwali. Every odds, if you take it and then if you try to calculate it, all is pointing out to the weaker hand sellers. That is where precisely you'll be able to go and react to that. I never anticipated that there will be 800 points gap up happen, because I never anticipated that the news will come. But I know that this could happen with a high priority, but I never know how it could happen. How fast it could happen, I don't know. Right? Whenever it is happening, it is also a surprise to me that 800 points gap down. Oh my God, 800 points gap up. So yes, it has to happen, but it often always surprises you. But you know that you will be right in your trading decisions, but always you're going to see the surprises from the markets. You never know how it's going to come.
Okay. Did you able to capture those big moments?
I took an 2,000 shares of Bank Nifty out of the money options, 1,000 points wide, and I closed around. I took around 7.5 rupees. Vinod also knows about that, and we closed around 118, and unfortunately it went to 349.
Great.
But I'm able to play this ORR. Price went up 100 points, so I given up. But eventually it went some more. Okay, so any other questions, or we can take a look into DHFL charts. DHFL, right, Ramesh?
BHPL.
BHEL, Bharat Electronics.
Yeah.
I'm sorry, your voice is getting clipped. Can you repeat again?
That's right, Rajan. BHEL, Bharat Heavy Electrical.
Okay. So let's say, first I'll connect to my data. Continue. And I have to add BHEL to the list. So NFO, BHEL. So BHEL futures I want to add. Continue.
Rather, meanwhile, one question.
Yeah.
So, how the market profile works on the non-liquidity symbols or markets?
Better don't.
Okay.
Better don't use for long. Use it only for high liquidity symbols. So prefer using in LIX stocks. Or I generally prefer using Nifty 50 stocks. I don't go beyond that.
Okay.
If you can use it on a mid cap stocks also, but don't use it for penny stocks and all. It doesn't make any sense.
Okay.
So I'll open BHEL charts. So GL. BHEL. Yeah, it's about to load. So since BHEL price is 72, I'll move myself to 5 paise TPO. So go to indicators. So reduce the TPO size to 1. So if the price is less than 100, we'll be prefer using 5 paise TPO. That's how the yesterday's sheet which I given, you could have got that. So one of the interesting setup is that there is an AB poor low is there. So in AB poor low is there, it has an odds of testing in a near term. So you can anticipate price to come and revisit 73. That is one information you have to look out for. And the other information is that, so since the month started, from the month day one, right? Day one. Okay. So the day one high also got cleared. Day one low also got cleared. So we are not bothered about that month and activity, whether it's a momentum month or not. It is not a momentum month. Both has been cleared. Now there is on the upper side, if you want to focus, AB power high is the very first focus which is coming over there. And how the sell-off happened from the top. Are there any anomalies here? You need to look out. So probably if you find the anomalies, there is one anomaly here, one big anomaly, 3 anomalies, and 4 anomalies. So it's a poor structure. That's an emotional selling. So I'll be term this as a poor structure. I'll call this as a poor structure. Market always has the odds of coming and clearing back those poor structures. So poor structures, and AB poor high. So if you're focusing now, initially you have to focus on towards the AB poor high, and next clearing those reference. So that is the immediate target.
Rajendra,
we will look at from BHEL. Yeah.
Is that an anomaly?
Yes, there is a 4 anomalies over here. 1 and 2 anomalies, 3 anomalies, and 4 anomalies. Out of 4 anomalies, only 1 anomaly got cleared, but still 3 anomalies are left in the markets. But we have an AB poor high over here. It's an AB poor high reference level, because you see that particular day that A and B, the difference is only 1 tick. The difference is only 1 tick. Either there are no tails. The tail can be either 1 TPO or maximum it can go for 2 TPO. Only a special case in case of a AB poor high. And AB poor high are likely to get cleared faster. If when it comes to stocks, maximum it can go up to a month of time frame. It can clear very next day also. It clear 2 or 3, 4 days also. But the maximum it can go and irritate for up to a month, but it eventually comes and get back those AB poor high with a very high grade rewards. Very, very rarely it misses AB poor high, AB poor lows. We've done a back test. Out of 100 cases, 3 or 5 cases it gets missed out. So AB poor high is also a short-term reference, and they are always destination targets. Prominent point of control, destination target. AB poor high are destination targets. Do I trade AB poor high or poor low? Definitely I'll trade. I traded in stocks also. I traded in indexes also. I traded. The success rate is quite decent. The only question is when it's going to get to come and test. If it is stocks, it comes and revisits with less than 30. It can go up to a maximum of 30 days. If it is index, it will be anywhere between 3 to 5 days.
Like for stocks like BHEL, if the company is showing poor results, or its business is going down, then it may not revisit these higher stock prices.
What kind of higher prices you are talking about?
Like that is AB poor high and all. If the company results are likely to be poor, or the company is on a downtrend, polar downtrend.
Okay.
Then these numbers, would they visit? Like these?
Yeah, it revisits because it's very short term. I'm talking about only 0.5% or 1% price action movements, or 2% price action. It doesn't matter. Fundamentals doesn't matter when we are looking into the revisit of those trade levels.
They are very near. Okay.
It doesn't matter. No, it doesn't matter. So I'll be focused only on what kind of emotional plays. This particular day, I'm seeing an emotional selling activity, and this particular day I'm seeing short-term sellers. They are short-term sellers. That's why I'm getting a poor high. So again, poor structures are mostly created by emotional short-term sellers. Again, one more short-term sellers over here, and the very next day, markets are trying to break the day low, and now they're struggling to build a point of control below the day low. Prices usually tend to coming back, and activity is coming back. Now, if the value area starts building higher and point of control is showing high confidence, then eventually every poor high usually it tends to clear faster. So maybe Monday we can expect 73 to be tested, and in a worst case they might go and clear all those poor structures. After that, we need to again check how the market is coming and clearing on the upside. Based on that, we need to check whether we have to continue our positions or we have to cut down, and we have to you find a risk, you cut down your position, again let you reinitiate at some other place.
Understand that. Thanks.
Yeah.
So Rajendran, here in the 3rd of Jan also there were some anomalies which was cleared in the 4th of Jan, right?
Yeah, there are, of course, there are 1 and 2 and 3 and 4 and almost four anomalies here. Again, 4 anomalies here. That means emotional sellers here. Again, emotional sellers here as well. So 2 days we dealt with an emotional sellers. So which also means that there is risky to short in the direction of the markets.
Yeah, Rajendra.
Yeah.
What is the success rate of a failed auction? Will it visit it in T plus 5 days, right?
Yeah, it will be revisited in T plus 5 days. The success rate is 75% when it comes to indices. When it comes to stocks, 50-50. That is why we don't trade failed auction in stocks. Even there is a reference level, I don't trade personally because I don't want to take an 50-50 chance because it should be combined with some other factors. What other factors are showing? Based on that, blindly you should not, because of there is a failed auction is there, don't try to go with that. Maybe you can do the same thing with indices. If there is failed auction, you can blindly go and take a trade. You will be successful 75% of the time. But don't do the same thing with stocks because if the stocks are going to reverse, the end result is going to be dangerous results. You never know, a stock can tank 5% or 10%. That could, it doesn't matter what, that is one reference line, end of the day. It is not the entire context.
Okay.
Okay, but in comes to the indices, you can play it with a greater odds.
Do you consider IV in making any decisions?
No, I don't. Previously, we are looking into it. Now, I don't. We completely remove the factor IB into it.
Okay.
But I'll generally have a look into it. How the IB is, how bigger the IB is, or how small IB is, where the IB is. I mean, whether the IB direction is up or down. That direction I look into. Nothing much more than that. I don't look into the range. It mostly creates an unwanted bias.
Okay.
Any other questions?
So Rajendran, is it possible to look at an ICICI bank?
Yeah, I'll do. With ICICI Bank, we'll close in the charts. And let's say I go back to all instruments. I'll add ICICI. I think I already hold ICICI. Yeah. Some time back, I was used to look into ICICI. Yeah. So whatever it's coming in enabled, only those charts only those charts updates in real time. So that's how global data feed programs. So in my case, I'm going to open ICICI. So ICICI, okay, better search from here. ICICI. Press OK.
Can we able to remove other instruments from that instrument list, whatever you searched from?
Yeah, you can remove any other instruments. You can. You have to go to Control Center.
Okay.
Always you have to go to Tools, Instrument. This is where you can edit, delete, remove anything. You can do it. Select it and then remove. But make sure that you are not removing correct symbols. Right.
Okay.
So here is ICICI Bank. When it comes to ICICI Bank, I prefer using 10 paise TPO or a 25 paise TPO. A 10 should be good, I guess, the current volatility. So I have to use 2. 2 will be multiplied by 0.05. Automatically, it brings 10 paise TPO in ICICI Bank. So probably the same thing happened here as well. It tried to break a 2-day low. If you monitor that particular day's confidence, it tried to break a 2-day low. Point of control started initially building higher. Above you can see a lot of whipsers coming around 2-day low. Price started getting banked into the range. That itself a sign that the morning sellers are not serious, right? But you see that it also leave a clue over here. It forms an AB poor low. Means even if they're gonna go higher and higher, they will eventually fall back over here. So means if you're thinking about investing, not a good place. Maybe you can wait for the AB4 low to clear, and you may think about investing later on if situations are favorable, right? And maybe you can see some immediate uptrend, but eventually they will fall back. The same AB4 low is also there in HDFC Bank. Yesterday I shown you that similar AB4 low is there. So maybe banks might be bullish in short term, but we have to switch back to the short side again. So let's see how the things goes. Maybe we are going to see a bullishness for 1 or 2 days in banks, and again we might give up all the gains. Is it what so? We need to look into the next 2 days of activity. Then we have to decide, should we have to short, or the markets are going to sideways, which place we have to short again. So you have to be coming up with a flexible mindset when you have these kinds of patterns. You should be ready to trade immediately long. At the same time, when something is happening, let's say on Monday, you're getting an one more inside bar here. Nothing was happening inside. In fact, it turns out to be an inside bar. And third day, price opens here. It straight away tried to take the day high. Okay, it would have been broken a 2-day high. This is 1-day high, and this would have been 2-day high. But instead of building more confidence, market started coming back into this range, and it started building more activity below the 2-day low. Then you can think about approaching the AB4 low, which was there on the deeper downside. So the AB4 low says that there is maybe in a short term we may see some uptrend or may not, but of course you have an triple distribution day, so that reference will be your immediate reference level. If at all, if there is any change, it has to come immediately. Immediately it has to come. You will be seeing Monday price opens here, and straight away they go towards the AB4 low. If it is not immediately, let's say instead of that, market opens gap up here, it does a lot of activity, and it does more activity over here. Then some other place it will show you that some other place you will get some high confidence selling. There you'll be able to go and fade towards the AB4 low. Right, so it's not. If you ask me, is it the right place now to initiate a short towards AB4 low? It is not. Maybe it could be Monday, or after Tuesday, or after Wednesday. I don't know, but we need to monitor. But definitely AB4 low gets cleared faster. Now it is not the right time. Maybe after Monday we have to revise again. Can I trade against the AB4 low? If it is not, again you have to wait for one more day. Can I trade against now? Yes, situations are favorable. You are finding some more odds. Then you can initiate the trades whenever the market is showing some good confidence selling, or you can also initiate a trade whenever you are finding a good low confidence buying. So always you can do a mean reversion trades. Every time you are finding an low confidence buying, you can try to fade, or you can also try to fade whenever you are seeing a high confidence selling. But now it is not the right time to fade. You have to wait for some more time. Maybe that time that could be extending for 1 or 2 or 3 or 4 days. Maybe it could be it could present you even more better opportunities, right? But one thing is very clear: this series AB4 low has the higher odds of taking it out. Still, we have another 14 to 15 trading sessions, so it can get cleared maybe by the series itself. Right, let's monitor this ICICI Bank. I'll be monitoring AB4 lows in ICICI Bank. I'll be monitoring HDFC Bank lows as well. So let me pull up HDFC as well. So HDFC also we spotted an AB4 low, right? HDFC Bank. We spotted an AB4 low.
So Rajendran, on the ICICI, whether on the 4th, was there a confident buying which was happening?
On the ICICI Bank?
Yeah, ICICI Bank, we can see a confident buying which was happening, like high buyer confidence also, right, on 4th.
One second, I'll go back to ICICI. Yes, it's a high confidence buying. Initially, it was a low confidence selling because it broke on the 2-day low. But lately, you are getting a single print zone. It's a high confidence market that is not getting cleared. Again, this is also not getting cleared. It's transforming into a high confidence buying markets.
Okay, thank you.
Yeah. Okay, now let's move to HDFC Bank. HDFC Bank. I have to change the TPO size to 50 paise. So right click and go to indicators. And I have to make it as 10 multiplied by 0.05. It becomes 50 paise TPO. Apply. It's HDFC Bank, right? Sometime back we had that AB poor low. No. Okay, then there's only G2 low is there. Okay. Maybe then it is not HDFC Bank, maybe it's something else, some other different instrument. Okay, anyways, we have you can see the price comes and touches the point of control exactly at the prominent point of control. It very precisely it comes and touches. So that is an weaker reference. Means the HDFC Bank is not doing good here. So always price can come and clear those zones again. So HDFC Bank, you have to be really cautious. And you have to be really cautious again here because there is one more G2 low is there. So if the HDFC Bank is started trading inside the range, despite all the bullishness which is coming, it's supposed to come in Nifty and Bank Nifty. We're not very sure whether it will come or not. But if it is going to come, despite that, HDFC Bank is traded. It's doing opening here. Then there is a point of control. You see that there is a point of control, prominent point of control here. There is one more prominent point of control here. When there are two back-to-back prominent point of control here, and market usually opens inside the range or opens over here, we generally tend to do an inventory correction. So they are mostly we call that as an inventory getting long to too long. And also there is a weaker pattern. All these patterns, the one prominent point of control, two prominent point of control, and G2 low, all are pointing to only one information, that there is a weakness in HDFC Bank likely to kick in, right? So maybe if Monday, if they're going to take even if there is an open gap up open, price is coming back into the range, you have to be really cautious about it. More activity happening down below that. All odds could be towards the G2 low. And of course, the prominent point of control and one more prominent point of control, price coming and revisiting this point of control and bouncing back. All are saying that it's a 45-degree line as well. You see that it's a 45-degree line. Price goes and exactly closes below, close at the. So if you take a combined decision, there is a 45-degree line. Okay, there is a 45-degree line. So mostly priority has to given to the 45-degree line. Maybe we might open gap up, but then if the price is coming back into the range, that is the first time you have to look into the shorts. 45-degree line, usually it results in a short covering activity. Price could open gap up in HDFC Bank, right? And if it is a good confidence, they will stay trading above that. Maybe you have to learn to wait for some more time. If it is not, usually they come back in, they do more activity. You will have an ample amount of time to look into shorts towards 2114. Right? So that's how this is one good setup which I'll be monitoring on Monday. So let's take this as a case study. ICICI Bank AB power low is a case study. HDFC Bank, the G2 low, back-to-back prominent point of control, it's a case study. The 45-degree line is a case study. So how combining this information, how the market is going to react, that's what we're going to study on Monday. And of course, Nifty, Bank Nifty, we're going to study. At the same time, we'll be taking one or two stocks, maybe ICICI Bank. ICICI Bank, we are going to look into only one thing. AB power low, is it going to clear the series or not? I'm not bothered about what the ICICI Bank is going to do. I'm going to bother about how long it is taking for the AB power low to come and clear those references. That's what we're going to look into it. banks are showing weakness, but at the same time, there'll be temporary bullishness is going to kick in. That's what we can learn from the profile auction setup, which has been built based on the last 3 days of activity. Let it be Bank Nifty. Let it be HDFC Bank or let it be ICICI. That's what we'll be able to understand. HDFC Bank and ICICI Bank are showing temporary bullishness, but it could, although temporary bullishness could be loosen out. Whereas when it comes to Bank Nifty, I don't find any temporary weakness. Let me check. Off late, I was looking more into Nifty, so I haven't looked into Bank Nifty much.
But Rajendran, these HDFC and ICICI.
Yeah. So one more example here. You see this. This is a poor structure here. So you see the anomalies which came on 1, 2, 3, 4, 5 anomalies. And one more thing is that you see this low. The difference between first low and second low is only 2 ticks. Only 2 ticks, a couple of ticks. So 3 ticks. So which is very mechanical to me. Means some stops would have been placed below this level. So maybe temporary bullishness, but you cannot trust this bullishness. It's a temporary bullishness, but we cannot trust this bullishness because it comes up with an anomaly. You see that the anomalies are almost 5 anomalies in a row. So if you try to trade longs, you have to cut down your longs, and then you have to monitor. Again, try to play the strength, cut down on the longs. Again, try to play longs, cut down on the longs. When you find a short opportunity, all your thing is that you have to wait for all the anomalies to get a clear, and maybe final stop hunt again coming back. So whatever the uptrend it's going to come, it may last for 1 or 2, 3 trading days, and then probably we have to think about whether we have to short there or not. That is how we have to prepare for the day. Yeah, questions.
So in this, can we see a pullback high here in this Bank Nifty?
Yeah, you can. There are no single prints, right? So in that case, you can consider this as a pullback high, and that is valid only for tomorrow.
Tomorrow, okay.
Yeah, only tomorrow. And let's say tomorrow market opens gap up and it does some balancing, and we'll remove the reference for the next day. It will be valid only for tomorrow.
Okay, thank you.
And that will act like a support for tomorrow. That's it. So I'm going to stop the session here. And if any questions are there, we'll take tomorrow around 9:30 to 10:30. We'll be meeting and we'll be watching we'll be talking about the market confidence. We'll try to fill up the sheets. And I think that itself, it's going to take a lot of time. And the HDFC Bank Nifty, we're going to monitor seriously because banks are showing, even though markets are going to open gap up, there could be a weakness, could come in 1 or 2 or 3 trading days. And whatever they gain could be loosened back again into the system. So that odds are there. But let's see how the behavior which is going to come on Monday, and how confidence help us to solve all those issues. That's what we're going to go through the next complete days of journey. We'll be mostly focused on confidence will be the most focus. Next comes the profile structures, key reference level. It is always going to be a combined outlook, right? Yeah. Finally, how you will be able to, even if you are able to forecast that what is going to happen. So I'm forecasting that Bank Nifty will come down, but how I'm able to travel through all those information on day-to-day basis, and then how I'm still able to write in my own view. That is what we are going to practice, right? Taking a view, we can easily take a view, but trying to follow in a real-time execution, that is what really makes you a better trader. Right. So with this, I'm stopping the session here, and will, as usual, the videos will be uploaded in another 1 or 2 hours. So you'll be able to watch around 6 o'clock or 7 o'clock. You'll be able to watch all those recorded videos. Right. So what is the success rate of failed auction? As I said, T+5 days, yes, definitely revisit in indices or Nifty or Bank Nifty, it will get revisited with the 75% win rate odds, whereas stocks, it is 50-50. Right? Yeah. Thank you.
Thank you.